This conference will now be recorded.
Peace, power, and prosperity, family. This is the Bitcoin Block Bully coming to you with another new money matrix tutorial. Um, Doing a class tonight on how to utilize the Fibonacci retracement tools. This is actually interesting. If we look at Ethereum, you're basing right off your previous high from 2018. That's phenomenal. That is phenomenal. Which means if you break this, you can go down to your next spot, which is about $300. Well, you'd be a high here. But anyways, tonight's class, what we're going to be going over is how to utilize the Fibonacci extension tool. Which, before we get into the whole tool, I want people to have an understanding, for those that may be watching this class a little bit later on, what Fibonacci is. So let's just get a little background real quick on Fibonacci itself. So now we're not worried about the person who stole it from Egypt. But here we go. Fibonacci number. What do we want the rule? Let's look at the number. Fibonacci number. Real easy. I can't hear anything bully speaking. Can anybody else? Can anybody hear me? Can anybody hear me? Somebody said they can't hear me. Am I coming through? Hello, hello,
Yes.
hello. Okay,
Yep.
cool.
I can
Somebody,
hear you.
somebody, if you can, in the chat, just tell them that y'all can hear me. Tell them that y'all can hear me. Tell them maybe come out and come back in. Thank you, House of Rebel. All right. So in mathematics, the Fibonacci number, commonly denoted as Fn. Interesting. People in Chicago got Fn's. But form a sequence. The Fibonacci sequence in which each number is the sum of the two preceding ones. The sequence commonly starts from 0 to 1, although some authors omit the initial terms and start with the sequence 1 and 1, or from 1 to 2, starting with 0, 1, then the next values are the sequence. So basically, Fibonacci is 1 and 1 equals 2, 2 and 1 equals 3, 3 and 2 equals 5, 5 and 3 equals 8. And they keep adding the following number by the preceding number, and it gives them a mathematical equation. Now, this Fibonacci sequence, right, is found all in nature, more so. Let's actually go to images: seashells, roses, even individuals' faces, right? Fibonacci is all prevalent in the universe. The way the Milky Way is shaped, or formed, or appears. The way a toilet flushes is Fibonacci. Even here, we look at the Mona Lisa's face is Fibonacci, or structure. Fibonacci is prevalent. I mean, your ear. Let me see if we can find the ear one. That was an interesting one. If they got it here somewhere, I'm not gonna keep looking for it though. But yeah, Fibonacci is they call it, what do they used to call it? God's thumb, God's code. What did they used to call this? God's, there we go. God's fingerprint. That's what it was. I thought it was thumb code, something. God's fingerprint. Yep. There we go. That's another name for it, because like I said, it's prevalent all in the world. Oh, I've never seen this one. And they use the golden ratio. Yeah, but anyways, now what they've done is transfer that calculation, right, over to a tool which allows for those calculations to be automatically input, and then it gives you certain set values which equate to certain prices, right? So I'm just going to open this tool up real quick, like so. And here we go. What I want y'all to look at are the main pricings here, right? Or values, rather. So you have the 236, the 382, the 50, and the 618. This is 23.6%, 38.2%, 50%, and 61.8%. These are the four most important Fibonacci retracement percents that you're going to focus on, right? Everything else comes secondary. These are the most important. Okay, now I'm going to explain kind of how this Fibonacci thing works, right? As far as the percentages and why is it this percent and that percent and so on and so on and so on, right? What would be the best way to explain this? Cause I want to get something that's current. Let's see. In fact, you know what? We can actually go to Bitcoin. Let me go to Bitcoin and get that daily one. Here we go. So when you're using the tool, right? And I'm not going to get into how to use it yet. I just want to explain what these percentages mean. You're going to have a starting point. You're going to have an ending point, right? The starting point is normally going to be your previous high and or low, depending on which way you're pulling it. A decent analogy to use for something like this would be, you left the house at one point, went to a destination, and now what you're looking to do is get back to the house, right? So you left the crib, You went to the store, and now you're walking back to the house. By the time you get here, you're 23.6% of the way back to the crib, right? 38.2% of the way back to the crib. You're halfway home, 50%. 61.8% of the way back to the house. Now, okay, let me just keep going. 78.6% of the way back to the house, and then you made it back to the house, which is a 100% retracement, depending on how you pulled it. A retracement, it just means it retraces, it comes back to where it was. Okay, follow along. So then, if any questions or you don't understand something, slow them down and let me know. All right, so I can try to answer it for you. Now, what's interesting about these levels, right, and the way you want to use this, or the way that the way I've taught myself to use it, is that each one of these levels, when you're trying to make it back to the house, right, you're trying to make it back home, each one of these levels could be a pivot point, meaning that you can go from the store, from the house to the store, and get 23.6% of the way back home, and something distract you and you not make it, and then you start going further away from the house. Now, the same thing stands for the 38.2, right? You can make it 38.2% of the way back home and fail there and go further down. You don't always go further down, but you could have a turnaround at these specific points. That's what I want y'all to understand. Each one of these are a pivot, which could reverse you, right? Now, the way you're normally using this, depending on where you pulled it from, is you're actually looking for nothing more. Nothing more. Hold on. I think somebody's trying to come in. There we go. So you'd be looking for nothing more, depending on how you're looking at it, as more so than a 618 retracement, and then continuation of the trend, and then continuation of the trend, right? So let me reiterate this again. Yeah, I can always pull that. Let me get this over here. When you are looking at utilizing the Fibonacci, let's say we're in an uptrend, right? We're in an uptrend, and then you come up and you make a lower high, and then a lower low, lower high, and then you start to reverse, right? When you're using that tool, right, you're finding your low to your high. You're looking to see which one of these points is it going to bounce and reverse from, because you're looking for it to bounce no lower than the 618 and then continue in the original trend, which is the original trend was to the upside, right? So once again, depending on how you're using this tool, whether it's to the upside or the downside, which is this is an upside explanation, you're looking at these levels: 23.6, 38.2, 50%, and the 618 as possible bounce levels, right? And you're looking for it to bounce and continue in the original direction. Now, we're going to get into definitions of all this too. I'm going to back all this up with definitions, a lot of the things that I'm speaking about here. If you were using this in the opposite direction, right? Let's say we were let's say you came from an uptrend and then you started going down, 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 and then you stopped, made a higher low, higher high, broke that high, and now you've made a confirmed low, right? In that case, you will pull it from a swing high to a swing low like so. And now you will be looking at breaking. You can reverse here, reverse here, reverse here, or reverse here, right? In fact, I don't like how I did that one. Hold on. So you can reverse at the first point, reverse at the second point, reverse at the third point, reverse at the fourth point, right? And then continue in what? The original trend. It's all about the original trend that you're looking at these reversal points, y'all. What was the original trend you pulled it from? So as we look at Bitcoin right now on a daily, right, just to bring it and look at it in real life, a real life situation, we've got a confirmed high. As of right now, we have a confirmed low, right? Now I'm going to get into the science of pulling this from these wick highs or just the body highs and which one you want to pick. In this case, we're going to use the wicks. and we can see that we do have connection with the 236. So we've only made it about 23.6% of the way back to the house, and we failed to break through that level. So remember, high, low, come up. This is your first level of rejection. You need to get past here in order to continue, but right now you're rejected, right? Now, if you can get past there, this is your next level of possible rejection, right? You need to get past it, but it's the next level of rejection. So you're at your first level now, and you did not pass go. And the more that you stand below any one of these levels, because what you're looking at these as you're below them as resistance levels, right? In fact, before I just get to throwing terminology out there, is everyone here pretty much understanding of what support and resistance is? Just support and resistance, real simple. Everybody here got a clear definition of what that is, right?
Yes.
Yes. Okay, I got comments coming through. Okay, cool. So what Fibonacci does is automatically show you those support and or resistance levels, because what I want you to understand about support and resistance is that they are one and the same, just in different time frames, right? What does that mean? That means what once was support can turn into resistance, and what once was resistance can turn into support, meaning that each one of these, as of right now, resistance levels can actually be back tested as a support level, right? And that's where you look at something similar to let me see, what can we find? Maybe something like this. Move this over here. Whoop, not that small. Something like that. Make this a little, 'cause I want it to fit in there. Something like that. Bam. So you broke this resistance, hit this resistance, but then came back down and treated this as support. And now you're bouncing, or the idea is that you want to stay on top of here now so that it allows you to bounce and break this higher barrier. Does this make sense so far? What once was resistance can back test as support. Does this make sense?
Yes.
Okay, cool. Now let's get rid of all this. Let's get rid of all this. So once again, Fibonacci sequence of numbers, they've turned it into a tool that you can use. It's going to give you those sequence of numbers. Now there's certain levels that you want to be familiar with, right? Certain rules within Fibonacci, right? So if we look at our normal, what is it called? You have what is known as a normal level of retracement. Normal level retracement Fibonacci. Here we go. This is where, what this means is that this is normally where price will go. And the thing is, it's all about information, right? Once you understand how a number of these tools work, it allows you to understand how people are able to predict where prices are going to go based off of the mathematics and not based off of just guessing. It's really based off the mathematics. So let's see. We kind of already went through this. The Fibonacci retracement levels connect any 2 points that the trader views as irrelevant, typically a higher point and a low point. The percentage levels provided are areas where the price could stall or reverse. We just talked about this. The most commonly used ratios are the 236, the 382, the 50, the 618, and the 786. Now, I didn't really speak about the 786 because I didn't want to get that far, but since they brought it up, well, no, not yet, because we're going to talk about, before we get to the 786, we're going to talk about the golden ratio, which is within the normal levels of retracement. But when they're speaking about this, what they're saying is that when you're using this tool, right? Let's use this on a macro level and see how this tool played out in the past. So what we're going to do is use the low from 2018 and the high from 2019 and see where the low came in 2020 as relevant with the fib level. Oh, 786. So, and this is the thing, you're going to learn to look at this respectfully without the fibs, because I mean without the wicks, because a lot of times the wicks will overextend certain levels. But there we go. Broke right down to your 786, found support, and then rallied from there. But peep how it broke down on each level though, right? Peep how it broke down on each level. So remember, we used the wick high. Let me see what the body actually gave us. Yeah, body gave us a close right above the 787. Oh, there we go, right above. But we're gonna get it back on a wick high. There we go. So as we hit the wick high, we came down. We actually broke below our 236, bounced off of the 382, and then rejected from the 236. And then once again, bounced off the 236, was unable to make it back up. Excuse me, bounced off the 382, was unable to make it back up to the 236. And then we broke shy of the 50, was able to rally back above the 50, but then failed what? To get back above the 382. So remember, first failure was what? To get back above the 236. Second failure was what? To get back above the 382. Then we broke back below the 618, which we did hold, was able to actually get back above the 382, not hold and break our previous high, and then broke all the way down to the 786. And then you rally from there. What I'm just showing you is how it comes into contact with these certain levels time and time again. So this right here was a full retracement down to your 786, which the way that I've learned is normally when you break the 618, that's normally grounds for a reversal, even though the 786 can be the last line of defense. But normally if you break and close below this, it's last of the Mohicans, meaning that if you're going up, right, and you come back down, bounce, 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 and then break below here and then crack under it, you're normally reversing. But I also look at the 618 as that level too sometimes, and then see how it relates when it gets to the 786, even though the reason I use a 618 is because there's so much wiggle room between the 618 normally and the 786, right? So that's a 24% move. So if I break the 618 in my trading habits, I'm normally going to use this as a line and already say this is a reversal, and you can usually get a nice short between the 618 and the 786, right? We're not going to get into short and all that. Yeah, I'm just showing you the example of why I don't really use this as my last level of as my last normal retracement. I stop at the 618, right? So let's get rid of this real quick. Now, within this normal level of retracement, you also have what is known as the golden ratio. Where's a decent definition? Here we go. Let me see. All right, this is a good explanation. Here we go. In financial markets, the Fibonacci golden ratio has the same mathematical base as the natural phenomena which they were talking about up here. And basically, that's what's happening in nature. Now, when traders use the golden ratio in their technical analysis, the ratio is usually translated into 3%, 38.2, often rounded to 38%, 50, and the 61.8, usually rounded to 62%. Having said that, traders can use more multiples when necessary, such as the 236, 1618, which is one of my big ones, 423, 684, and so on and so on and so on, right? The 382 ratio is found. Oh, I'm not going to talk about how it's found because that doesn't really matter. Let me see what else they going to. Okay, these are the retracement levels we were talking about. Blah 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 blah. Yada yada yada. Okay, all we want to know is about was the golden ratio. Now, the way that I tend to use the golden ratio, right? So let's refresh all this. In fact, there we go. In fact, yeah, let's keep this here. Bam. So the way I tend to use the golden ratio, right? Oh, hold on. I messed it up. There we go. Cool. The way I use the golden ratio is that when I'm able to find support above this 236, right, and or below, it depends on which way you're pulling it. But in this case, right, do I want to go that far? No. Let me speak about how to pull this first, and then we'll get into how to actually use these. So this is what I want you to understand. It's relative to the time frame you're using, the situation you're using, and really what you're looking for, which is kind of Amir, I submitted an offer for the how to discharge. Okay, I got you. I'll take care of that after the class. It's relative to the time frame you're using and what you're really looking for. So I'm going to start large and work my way down on Bitcoin and show you how I would use each Fibonacci relative to the space or the time that we're in right now. So right now on this monthly, we are in a downtrend. So that means I'm looking for downside potential. That means I'm looking to see how low it could go. So if I'm trying to see how low something could go before what? it reverses and keeps going up because the original trend was to the upside, and now we're going down. So I'm looking to see, has it broken that normal level of retracement or the golden ratio, which will then give us, the outlook of a reversal possibly or not. So now the thing is, where do you pull this ratio from, right? Or excuse me, the Fibonacci from? You normally want to look at your previous low before the last rally. So there's a couple of different ways that y'all could pull this, or that an individual could pull this, right? You can look at your last low here from 2020 and pull it to your high here from 2021. Let's see what that will give us. And now this is where you're going to use discretion. Like, okay, well, I got a wick here. Do I use the wick? Honestly, if you're going to use this wick, I'd just use this low. I would start with the body closes, because what we got to understand about bodies versus wicks. Wicks are attempts. Body is what happened. So yeah, price attempted to go down here to $3,880, but you actually ended up closing around 64, and then that next monthly you continue from that 64. So the body is the major denominator. The wick is secondary, right? So we'll use the body closing for now and see what that gives us. So I'm going to start with my low point and pull this. Now you have to know exactly where your high point is. This is not your high point, because if I scan left, that top is higher than that. So I'd use this high point. Remember, we're just using the body, So bam, we stamp that there, and lo and behold, what do we have? A 786 retracement, which we bounced off of, but now that gives us something to work with. Because now we're saying, okay, well, we're at the last of the Mohicans here, right? Any type of candlestick closing on the monthly below the 786, you normally look for reversal, which then means that Bitcoin, well, I want to look for it to go back all the way down to the one spot. We're going to get into all that. But it normally means that you're going to reverse if you do close below this level. And this level, as of right now, is $18,180. This is on a monthly now. This is on a monthly. Be mindful, monthlies take 30 days to play out. Okay. So that's the level that we're looking at on the monthly. We've already tested it. In fact, just in this short demonstration, we can already see how the Fibonacci has came into play. Because if you're looking at buy orders and you're looking to buy the dips, right? These are your dip levels. This being the last one if you're looking for a reversal to the upside. So whoever had orders just preset at the 786, phenomenal play, but now they need continuation to the upside, right? But phenomenal play just based off of what? Fibonacci. It gave you the answers to the test without you having to do anything other than knowing where to pull it from. Okay, so now we got our 786 here. Now what we're looking at is the fact that we are below our golden. Well, let me get into the golden. Did we do? Yeah, we did do golden ratio. We talked about it. Let me actually draw it in now. So this is your golden. Well, I didn't really go into it. We're gonna go into it in a second. Now, the idea, just looking at fib levels as support and or resistance levels, this was a support level. We got a buy, but then we broke through it. So now what happens to support is when you break below it, it turns into resistance. So now we have to look at Bitcoin first and foremost, working its way back up above $27,409 before we ever talk about 30K, 40K, 50, none of that stuff matters, y'all. None of that matters until you're able to break your first fib to the upside. Now, if you get too many closings, meaning you get too many of these monthly candlesticks below here, right? Or you just flat out close this one below here, you're going to probably continue. But if you get too many monthly candlesticks, let's say we pop back up here within this month. Let's say maybe something like, maybe if we see something like this, we pop back up, but we close below it, and then we see something similar to this pattern happen. Now, mind you, this is a monthly. That means this is what, from June of 2022 to for a year, because these things take a while to play out. If we look at the last bear market, well, not the last bear market, but what was the one I was the biggest? This was the biggest one I was in right here. This bear market lasted from January 2018 until February 2019. That was over a year and a couple of months. So don't think that this thing, and that's why I tell people that you don't have to be in a rush and you're not gonna miss nothing. You're not. This shit takes a while to play out, right? So just understand that this isn't just gonna magically reverse and it's gonna be back at 60,000. You're gonna miss your entry, y'all. Never, ever, ever think like that, and don't allow anybody to allow y'all to think like that. But anyways, back to the lesson, right? We're seeing it constantly reject here. Now, this could be rejections can mean one of two things, right? It's still going to be relative to other technical analysis you use, but that could either mean that you're trying to break through, and each time you break through, you're getting a little bit stronger, and the resistance is getting a little bit weaker, or on the flip side, you're trying to break through and you're getting weaker and the resistance is getting stronger. And that is usually dictated by, are there more buyers than sellers or more sellers than buyers? Okay. Now, let me get rid of that. Let's talk about using each one of these levels real quick. Let's talk about using each one of these levels. Let's pull this. Let's do a larger retracement. Let me do a larger retracement. Let's do. Damn, that's still on point. The 786 is still your turnaround area. 17,200. That's still kind of solid on point no matter how we flip this really. Let me go to a lower time frame real quick. Bam. There we go. Here we go. So I'm just going to use this hourly chart real quick. Remember, you want to look at, so when you're looking at where to pull it, you have to look at your different trends. Remember, you only got 3 trends: uptrend, downtrend, consolidation. This right here was a downtrend. Boom, 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 boom. Well, wrong tool. They don't want to use that. Where is, here we go. This is a downtrend. And then you stop, came up, made a higher low at this point, at this higher low, and then you came up and broke this high. This was an uptrend. This was a local low. This was a local low. So you got one of two things you can do here. If you're looking to see how high this can go, you would pull it from this high to this low. If you're trying to see how low this can go, you pull it from this low to this high. What I want to look at is how low we could possibly go out this alley, because I want to start with the 236 and work our way down to the other golden ratios. Okay, let me get rid of this. We're gonna go from our previous low, and I'm gonna try with the wick first and see what comes out. Okay, kind of off. Let's see. Let's do it. Let's close it to the body. I actually like body to wick like that. Nice bounce off the 382, and now we're holding it 236. Okay, cool. So the way you'd use is, right, you got your high, you got your low. Your low bounced off the 382. You broke back above the 236. Now, as long as you're holding above this 236, you look for consolidation. Either you're going to move sideways above this, and you're going to always try to break one side of the next. You're either going to try to break this to the low, or you're going to try to break your previous high, which is usually your one spot, to the high, right? But either way, you're above this 236 now. So what you look at is, if we end up breaking this level at the 236, which right now is $20,267. Right now you're trading at $20,506, right? So the way you look at this is, if we close or end up, well, we're on an hourly, if we break this on an hourly and close below it, or even if we just break it sometimes, depending on how you're trading it. But if you break below $20,267 after being at 20,500, then you would target what is known as the golden ratio, right? How do you get the fib numbers to display on the right? Oh, okay, let me show y'all. I forgot. Let me break this off from the very beginning. Let me do something real quick. Hold on. I got you. Hold on. Let me show you how to get everything set up with the Fibonacci, because I don't have mine how default is. Mine is not set up as default is. So let me see if I can get another screen up and show y'all how to get it from the very beginning to the end. Let me see. Get started. Hold on. Give me 1 second. Let me just open up a brand new KuCoin account real quick. Just off whatever. Here we go. I like to opt out. I don't have no picture. Continue. Okay, we want. Hold on, let me make sure I got this open right. Okay, cool. Let me share the screen over here now. All right, so just real quick, right? For anybody that's going to be opening up a get this out the way, a trading view account for the first time, it's probably going to look like this. Just real quick, just go up here in the corner, left hand corner, turn it on dark color theme just to get it dark because you don't want it that bright, especially if you're going to be looking at it at nighttime. I'm not going to go through the rest of the stuff, but just real quick with your Fibonacci, right, which is over here on the left hand side. This is where your toolkit is, right? Fibonacci is normally going to be, it may not have the Fibonacci first. Sometimes it has the pitchfork first, but it's going to be your third option on the left, and you're going to hit the little arrow right here that points to the right, and it's going to open it up for you. And what you can do is put a star right here next to fib retracement, and then bam, you see how that happens. So actually, what going through one of my other classes, I actually show you how to just create a toolkit where you can get different tools over to the side that you may use by starring them up. You know what I mean? Similar to what I just did over here. So now that you got that open, you can slide this down here. Let me get rid of this and just click on Fibonacci. So when you first use the Fibonacci, right, it's going to look like this. And this is how it's going to come out. So what, can y'all see my screen? Am I still
Yes.
live? Okay, cool. So what you're going to have to do in the very, very beginning is you're going to have to go into the settings on the Fibonacci found here. So you're going to open it up. So the first thing I do is I extend my lines to the right, like so. See, extend lines to the right. What does that do? Well, I'll show you what that does in a minute. Second thing I do is, I might as well do it. I add on a couple of more percentages, right? I go from the 1272 all the way down to the 4 spot and getting everything in between. Whoop. And then I go down to background. It's up to you if you want to keep the color. I clear mine up. Sometimes I keep it. It really depends. I'm gonna clear it up for this reason, just cause with my values, I'm gonna change it from. So these are your values. Here it says 0.38, 0.23. So I want mine to be percentages, like so. Bam. And then labels, you're gonna go from left to right. Sometimes it may be in the middle like this. I don't like mine in the middle. I like mine to be on top, like so. That way I can see the percentage and what price that percentage correlates with. And that's it. Hit OK. Bam. That's how you set up your Fibonacci, y'all. Was everybody able to follow? I know I went pretty quick. Was everybody pretty much able to follow along with that if you don't already have it set up like that? Here we go. Okay. Where did I leave off over here? What were we looking at? What were we looking at? Oh, golden ratio. That's what we were looking at. Golden. I think we were looking at the golden ratio. Kind of forgot now. But anyways, we're gonna come put it in anyways. There we go. So now, as you're using the golden ratio strategy, right, what you're looking for is a break of the 236 and a closure below it. At that point, you automatically, this is not, let me put this out there also. Any and everything that I ever share with y'all is not financial advice. These are my opinions and my opinions alone. This is just the way that I trade or the way that I do technical analysis. Always go do your own due diligence and your own research. This is for entertainment and or educational purposes only. Okay. Okay, I think somebody else was trying to grab some of these classes too, and I did not see their inboxes. Yeah, a lot of people had that problem where they convert the money to another network and they can't find it because they don't know how to read the blockchain. I'll get to that. So normally when you break your 236, this gives you 3 targets for you to look at now. So if I was looking for if I was looking for this to continue up and I'm trying to buy the dip, as people say, right? And they don't know where excuse me, they don't know where the dip may be. I don't want to use language on this video because it's going to be sold. But you don't know where the dip's going to be. This gives you your dip levels. This gives you your dip levels. So if I'm looking to buy the dip, right, I'm looking to buy at 19,793, 19,410, and 19,026 or 19,000 respectfully as dip positions because I'm looking for it to do something similar to this, right? I'm looking at it to do, whoop, stop flipping like that. There we go. Bam, almost perfect. I'm looking for it to come down, tap these, and then reverse back up and take out your previous high here. So I'm looking to pick up orders at each one of these levels. Now, I want y'all to understand, right? I know a lot of times when people trade, people just make one trade. That means if you're buying a dip and you got $1,000, you're going in with that $1,000. Now, understand, like, man, you can really break that down. You can really break that down. You already got 3 different price targets, right? Now, that's the thing. You don't always have to break the 236. Sometimes we'll come up, bounce off the 236, and just continue, right? So now with the normal levels of retracement, let's just say this. Let's say that we were trading up here. You already got your first pullback. So you actually could have pulled this like that first and foremost, and you could have been like, okay, I want to buy the dip on this hourly pullback. So now I'm looking at putting orders at the 236, 382, 50, and the 618. So that means that you're going to break down your $1,000 or whatever it is into quarters, right? 25% here, 25% here, 25% here, and 25% here, with normally a stop loss below here, which means at your highest order, you're looking at taking about a less than a 9% loss, less than a 9% loss on your highest dip order, right? Everything else is going to be a little more minute, less than 7%, less than 5%, and the last dip that you buy would be less than 3% loss if you do use a 786 as your reversal level, right? As your get out level. But this is giving you the positions to buy on the downside after you've reached a local high, right? Now, like I said, there's a couple different ways we can look at this. We're looking at more downside potential. Let's say we're looking for a breakout and to see if we do have upside potential, right? We would not use the swing low to swing high method. What we would look for is our previous high, which is here. And some people are like, well, why don't you use this one? Because this one already has a previous low here and then a mega rally from it. This one you could say, okay, this one really is actually subjective, right? You could use this high to this low or this high to this low. And it's the thing, there's no like wrong way. Like somebody could come here and be like, well, I pulled it from here to here and it gave me, whatever calculations it gave me, which is actually phenomenal. You broke, man, no pass, go past the 618, actually a double top. Or somebody could be like, well, I use this one and it actually gave you a break above the 786, which now gives you something else to look at because now you want to hold the 786 in order for continuation. So one is telling you reached your highest level of resistance and you're breaking down from that. Another one is telling you that you've actually broken your highest level of resistance, really your highest, your normal level of retracement, and now you're looking to hold above that. So in one time frame or in one pool, you got your support level that you need to hold. If you close below this, that means you can start retracing to come back down to these levels. On another time frame, you've already hit that rejection level. So if you continue to close below here and take out here, then more than likely you're going to continue to go to the downside. So on one, you got your full 618 retracement. Remember, this is my full retracement, 618. That's my golden ratio. That's normally, where's my marker at? That's normally what I'm looking at. Swing low, swing high, swing low, retrace, 618, and then reverse. Continue with the downtrend. That's normally what I look for, right? And we got that double top here. So now what this is telling me is that we've made a low, well, we're coming up to see if we're going to make a lower high because you also look at the trend. You got your low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Now we're looking to see, are we going to make a higher high? Because that's what it depends on. Failure to make a higher high than your previous high, followed by a couple of different things could happen. We can come down and still make a higher low and then come up and make a higher high. But if we come down and make a lower low, I'm more so than not going to expect it to come up and make another lower high, which if we come down and make a lower low than this low, normally you're going to retrace to the 382 and then come back and use this previous support at the 50 as a back test as resistance. And then you're going to reject from there. And then you're going to continue in the downtrend. So always remember, y'all, it's a bunch of different possibilities that could happen in this space. It's no one thing that can happen. But the more you see things happen, the more it allows you to kind of understand what may happen. That's why, as I'm giving this example, as of right now, I'm knowing that we could come down and actually make a higher low than this and then get another crack at making a higher high. Or we could come down and actually make a lower high than this and then come up and make a lower high, right? Now, in the same token, we could come down and actually make a higher low than this low, and then come up with a small failure above this high, and then just dump, right? So it's a couple of things that can happen. That's why you want to kind of set up those boundaries of, okay, regardless of all this, right, I'm using my fibs. I need to break above the 618. I don't want to break back below the golden ratio, because now when you're using this golden ratio in this sense, once you've made it inside the golden ratio, breaking back below it is extremely negative. Where's my marker? Bam. Yeah, so once we're inside it, if we break below it and then start to reject it, 9 times out of 10, you're reversing out of the move, right? Because once you make it in the golden ratio, that's supposed to be your hope, if you're still bullish, for more upside, but you need to break through it. Now, for anyone that's trading, remember, did we use this in a down? Yeah, we did swing high, swing low. So we're looking for 618 retracement, and then we're looking for continuation of downtrend. So for anyone that's trading to the downside, you would have used this move as a position that's short, especially on this double top right here, right? You would have used this position to short. Once getting the short position, using your 618 or just higher than your previous high as your position to get out of the short. Because as of right now, you're looking for this to continue to the downside. So let me clear this up. Up until right now, all this that I've been showing, all this I've been sharing, is everybody kind of following along? Is anybody lost right now at all? And I want everyone to have their charts up, because I want individuals to practice this. I'm going to let y'all pull y'all screens up and practice utilizing this and giving an analysis of how you're going to utilize this. But up until right now, is everyone pretty much following along pretty easily? Anything I need to reiterate or go back over? And I don't have a problem with doing it, so y'all can speak. Hello, hello.
So far, so good with me.
Okay, that's one. Anybody else? Anything I need to go back over?
I'm adjusting my fibs now to the right.
Okay. So you're still. Oh yeah, I forgot people were still doing this. Okay, cool. Pretty good. All right, now what I want everyone to do. Everyone got the charts up, right? Everyone got the charts up, right?
Yes.
No,
Is
I'm finna bring mine up right now.
okay. Is everybody on logarithmic in their chart? Is everyone using logarithmic and not regular?
Yeah, I'm on logarithmic.
Okay. I'm gonna take it as everybody else being on logarithmic. Nobody said no, so I'm gonna take it as everybody else is on logarithmic. And if you don't know how to get there, come over to your prices, right click on your mouse, and come down and just switch it from regular to logarithmic. And I'm gonna show you why I use that tool. If we look at Bitcoin on a monthly and we change it from logarithmic back to regular, this is how it reads. And I can't do any real TA with this right here. This is just slop. So I need to bring it open, bam, and then refresh. And now we got a real nice chart we can do. Let me turn this marker off. Now we got a real nice chart we can do some TA with. You know what I mean? But trying to do, like, I mean, let's just use the fib here. Even though it still works, it really doesn't give you any of this downside right here. I mean, it goes from, wait, what? It goes from 6,000 to negative $8,000. Yeah, see, already, no. Get rid of this. Nope. There we go. Bam.
Peace, Bully.
Yes,
So
ma'am.
on my chart, this is Yelly. On my chart, I
What's
actually
going on, Miss
lost.
Jelly Belly?
Hi, how are you? I'm not sure what I did today, but I lost my menu where I can, my tools where I can, pick the Fibonacci and all of that. I'm not
Hold on,
sure what.
I'm gonna let you share your screen. I got you. Hold on.
Okay.
'Cause we do have ways to recover that. So hold on. Make. Okay, and then I see someone said they're a little bit behind. Just let me know if you need any help getting caught up. You can share your screen with us, Miss Jelly Belly.
All right, so yeah, so it's supposed to be on this side.
Hmm. Okay, what I want you to do is right click on your screen. What am I looking for? Oh, hold on, bring it back open. What am I looking for? What am I looking for? What am I looking for? How do I usually find it? Hold on, let me go on my screen real quick. You normally just know how to do it by pressing buttons. I'm not good at explaining it. So that would be drawing tool, drawing tool, drawing tool, drawing tool, drawing tool, drawing tool. How do I get back my drawing tool? Where was the button at? Okay, do this, Miss Shelly Belly. Go over to hit. Let me see, layout, dark color. Oh, go down and hit drawing panel right there. Drawings panel right there. Turn that back on. Okay. Now go over on your Fibonacci and hit the arrow next to it. All the way on the left hand side. Hit the little arrow. Hit the star next to trend base fib. Hit the star next to trend base fib extension. Hit that star. The very second one on the fib retracement at the top. Just hit the star on the second one. There it goes down there at the bottom for you. All the way down at the bottom. You see it? Can you hear me, Miss Jelly Belly? Hello?
Yes, I can hear you.
Yeah.
Yeah, that's all I needed. I needed to find that. Thank you. I appreciate that.
Okay, cool. All right. Let me get the
Okay.
screen share back. Bam. There we go. All right. Okay, so now I want everyone to get this pulled up, and I want everyone. Let me see. What can we start off with? Let's start off with something. We'll start off with something easy. We'll start off with Bitcoin. I want everyone to put Bitcoin on a. We'll start with a daily chart. Right? So you want to start large, right? And you don't have to go too large. A daily would do good for you if you're trying to see the larger movements with Bitcoin. A daily chart would do good for you. So this just start with a daily, and I want us to get a grounding on how high Bitcoin could go from its current position, utilizing a swing high, swing low. I'm not going to tell anyone where to pull it from. I'm going to let y'all pull it right now on your own. But you want to find your previous high, pull it to your previous low. It's up to you if you use the wick high or the wick low or the body high and the body low. Once everybody gets it pulled up, I'm going to let everyone share their screen so we can take a look and see what you came up with. And then I'm going to allow everyone to give an analysis of what they see utilizing that specific fib retracement. Let me know when everybody's got it and if anybody needs assistance.
Say that one more time. You want us to say that one more time right in the beginning, what you said.
Okay. Pull it. So pull Bitcoin on a daily and find a swing high, swing low.
Okay, swing high, swing low. Okay.
Everyone find your previous swing high, swing low. First one to find it, let me know. I'm going to let you share your screen. Okay, brother Larry says he needs help getting the fib. Let me let you share your screen real quick. Right here. All right, you go ahead and share your screen. Who was that? Brother Bradley. Go ahead and share your screen real quick. If you're on a computer, if you're viewing this on a computer, you can share your screen. There we go. Okay, go over on the left hand side. You clicked on the wrong one. Hit the little cross up top. Hit the cross first so you can turn that off. Now go down and hit the arrow that's pointing out from that. Go back up. Go back up. Right there. Hit the little arrow right there to the right of it. See that little arrow pointing out? Right there. Open that up. See what it says fib retracement up top? Fib retracement. That's the one you want. Hit that star. Click on that fib retracement. And there you have it. Now you can pull it from your swing high, swing low. Now, an easier way to find these swing highs, swing lows sometimes, for those that are having trouble, identifying where the highs and the lows are, you can easily take your candlesticks, right? If For those that don't have the rest of these starred, you can hit the candlestick. It should give you a drop down, and you can change it to a. Let me make sure this is recorded. I'm gonna be so salty if it's not. Where the record button at? Hold on. Boop, 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 boop. Where is my record button? Okay, it's recording. All right, cool. Yeah, but go over here, hit this down, go to line, and then bam. Whoop, don't want to cancel this out. There we go. And it's going to give you your ultimate high here and your ultimate low here. And then this should make, I'm really giving y'all a cheat sheet, but I want y'all to be able to identify it. But just on the first daily, this is your high, this is your low. This is your high, this is your low. So you're going to pull it, swing high to swing low, like so. Now, once you do that, you can come and turn it back on the charts like that, and you can take a better look at it. And what you did was pull it from body to body, which is cool, right? That's cool. With the body to body, it's showing you where your previous support is here, which is then going to be your resistance level at 21,978. So I would psychologically just up that to 22,000 and round up. I'd say $22,000 is our previous resistance / support. Though I like the way that it shows the rejection level when I use the wicks, and that's why I mean by y'all are going to be able to make those decisions yourself about which one you choose to use more so than the other. The reason I like this one because it gives me a lower level of resistance that we've already connected to and rejected once, right? And then on that next level, which is the beginning of your golden ratio, if we can get to that, that automatically knocks out our previous high here, which you have to make a previous high first in order to reverse a downtrend. So breaking the 236 is going to give us the jump start we need. Fuck, I was supposed to let y'all explain this. But anyways, breaking the 236 is going to give you the jump start you need. Breaking the 382 is going to give you that higher high that you need. And then you can automatically start targeting those higher levels, breaking back up to, your next high. And then I'm going to show you how to work your way up through the whole line. I'm going to show you how to work your way up. But everybody got a swing high to the swing low so far on the daily on Bitcoin, right? Anybody not have it?
I have mine.
Okay. Now, actually, since I gave y'all that one, go to Ethereum. Because I didn't want to give y'all like how to break that one down.
Are we supposed to be on the hourly or the daily?
On the daily. Open up on the daily.
Oh,
We're gonna start a
on the
large
hourly.
time frame, and I'm gonna show y'all how to work y'all way back. So start on a large time frame. Now go to Ethereum and do the same thing. Swing high, swing low.
Do you know how to you know how the screen is super big? How do you make it smaller?
What do you
Do we
mean?
do that?
Explain, Queen. What do you mean?
I think you just
Like the
have to
candles are humongous.
you have to just
On
reset
my
your
screen?
screen.
Oh,
No,
on your screen.
mine's.
Okay, so look, do this. Go down towards the bottom. You see, now this only pops up when y'all look for it. So I'm gonna move my cursor down towards the bottom in the middle, and you see how
Oh,
these
wait a minute.
little
Let me go back
buttons
this.
pop up right here. Once again, start at the top, move your way down. See these buttons that pop up down here? So let's say my candlesticks look like this, right?
Oh,
Come down,
okay. Let me
refresh
see.
button right here. Bam.
Let me see.
Once
Oh,
again,
wait,
if
I'm
your
making.
chart is too messed up, come down here, hit this refresh button, and bam, it's gonna reset it for you.
Okay, I got it now. Yep. Okay.
Cool. Now everyone should be finding their swing high, swing low on Ethereum. Let me know when you found it. I'm not gonna pull it yet till y'all find it. Swing high, swing low on Ethereum on the daily. ETH versus USD. And when you're looking it up, ETH, USD, you can actually, I would prefer you use the index. Use the index right here. Ethereum all-time history index. This is the best one to use. Okay, we got Miss Pac saying, so I'm gonna let Miss Pac 10 share her screen real quick.
Okay, hold on, Brother Mir, because I'm looking at it on a different screen.
Hold on. You said you were ready. Now you're complete.
I am ready. It's just my trading views on a different screen, so I don't lose sight of what you're doing in here.
I got you. Just so when you go to share the screen, use application window instead of share full screen, and just share that specific application window.
Okay, go to medium use accessibility, open. Perfect. I just hit the screen share or screen button.
Yep.
Mine's is not showing the index chart, only Binance, Bitstamp, and Coinbase. It's
Take off. Do you got USD or USDT?
no, I just put ETH.
Type in ETH USD.
USD. Same thing here as well.
Hold on. Who's that, Miss Artist?
Yeah.
Okay, hold on. Let me let you
Yeah,
share.
I don't see it either.
Okay.
Why can't
I
anybody
think
find it?
okay, is it Ethereum all-time history index?
Yes,
Okay.
exactly. Ethereum
Okay.
all-time history index. Yes.
Okay, it took a while to pop up. Okay, let me go back.
Okay.
Ooh.
What did he say? Oh, Ethereum all-time index.
Yep. We still don't have your screen, Miss Pac-10, Miss Agnes. We still don't have your screen.
Trying to figure out how to get there. This-
Hold on. I
okay.
got you. I'm gonna send you the link back. Hold on. I'm gonna send you the link back again.
My apologies. I'm not.
You all good? You all good? You all good? Let's see. Bam. Make presenter. Bam. Now you
Okay.
should.
Okay. Open preferences. Okay, I get this.
You on a MacBook? Yeah, you're gonna have to go out, come in, go out, do all that funny
Oh
stuff.
Lord. Yeah, go to somebody else because I'm on
Okay, I
it.
got you.
Okay,
Yeah.
my apologies, but I could tell you what it is on my other screen where I'm pulling from if you want that.
Yep. Tell me the date, the
Sure.
high and the low.
Okay, on the daily, I'm on May 30th, and it's on the green candle at the top and then the low would be at 998 off the body close, not the wick.
What's the date?
June 18th.
So the 18th. So body close. So you pulled it from body close to body close. So
Yes, sir.
well, I'm not gonna show y'all yet, but we're gonna go to it. We're gonna go to it in a minute. That was a good one. We're gonna see how it pans out. So let me ask you this: why or why not did you choose to use the bodies instead of the wicks? Because some people are gonna be like, well, why didn't you use the wick? You know what I'm saying?
Okay, hold on. Let me look at it from the wick standpoint. Because I went on the line graph, the line thing, and that's where it pointed me to. That was the close and the low and the high off the
Yeah. With the line graph, it gives you the bodies, right? Correct.
right. And that's what I went off of. And
Right.
let me see what else. And I was just looking at the support off of the first line off the top. So it looked like it's consolidated off the 786 up there. So it was just hitting the fib lines a lot better for me.
Got you. And that's all that matters. Like she said, for her, that's what works. That's all that matters. It ain't about what the bully does or what it's about what works for the individual. So perfect answer, Miss Agnes. Perfect answer. Anybody else ready to go? Ready to share the screen? Anybody? Y'all don't have to share y'all screen, to be honest with you. If you don't want to, I can continue on.
Yeah, I
just
do
want y'all to
mine.
have as much interaction as possible. Who's that, Boogie?
Yeah.
Okay, here we go. You're not a presenter?
Okay.
There we
Okay,
go.
so everyone see this?
Yep.
Okay, so okay, why is it? Okay. So I chose June 1st down to June 18th. Can you hear me?
Yep. You're coming through clearly.
Okay, so my at June 1st it was 1958. That's the what would we call that? The one spot?
That'd be your one spot. That's your previous high.
Yeah. And just looking in that little channel there, it kind of came down and hit the 786 for 1, 2, 3, 4, 5, 6, 7, about 8 days till it kind of broke support and came down.
Mm-hmm.
And it found a little support at the 236 for about maybe 3 days. Then it broke support and came down again and kind of bounced off the
That's just your bottom because you don't have anything relative to go on below it. So that's just your local low.
yeah.
That's called a
So that's
local low.
okay.
And now, so what's the idea now? Now that we found our local low, what's the idea?
Well, I would look to go to a smaller time frame and see what it's doing in between. Um, See if it gets back above the 236.
Right, but now you don't even have to go to a smaller time frame. You don't even have to go to a smaller time frame. You can stay on the daily and tell
Okay.
specifically if you know what I'm saying you don't break this on the daily, right? If you fail to break it on the daily, because remember, price can only go two ways, y'all. Well, three ways. Well, really two ways, up or down. And what this means is that you're either going to break, and this is the thing. People are like, well, it can go either way. Yeah, but I'm gonna tell you something, man. This thing follows a frequency or almost like unwritten law the way that it works. It's not just gonna sporadically go up, break levels, go down. It's gonna follow this law of previous support, previous resistance levels, right? And it's going to follow this law to whereas if it's unable to break resistance, it's going to go for those lower levels of support. And at the same token, if it's unable to break support, it's going to go for those higher levels of resistance. It's just the way that it works. So as we understand this, right, that means that yeah, 40, 50, 60, yada yada yada. Well, no, we're looking at Ethereum, excuse me. 12, 13, 14, $1,500 sounds good, but none of that is applicable if we can't at least get back above the first level of resistance, which is the 236, which means that I'm not looking for Ethereum to go up at all until we're able to close a daily candlestick above $1,215 based off of Boogie's Fibonacci. Now, with the same token, remember, price can go both ways. If price chooses to come down and break $980 first, based off where it's trading, I would then put my weight more to the downside. So you allow, right? And this is what people can't do because it takes discipline. Because right now you're sitting in limbo and you're waiting to see which way it's going to go because you really don't know, right? So if we are going to go up, we first need to break that 236. If we are going to continue down, we first need to break that 981, right? But it's up to you to figure out where those levels are, which is what the Fibonacci is giving you without you having to guess. So now you can just base it off of this. Anything under 1215, we're bearish. Above 1215, then we start using what? What did we just go over? The lesson. After you break the
Level,
236, what do you use
the
as your
Median,
level.
targets? Right. But what is it called? Though? What's the
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 golden
The
ratio
ratio.
Fibonacci
called?
golden ratio.
Golden
There
ratio.
you go. Golden ratio. There you go. If we're able to get back above 1215, that gives us our easy target. So now we can make trades in our first take profit level is going to be 30. Well, if you want to take profit at these levels, there's a million different ways you can play that as well. Whereas you could just use the previous level as a stop limit and not take profit and move your stop limit up and allow a stop limit to take you out. But initially, if you're trading this, your first take profit is going to be 1360. Second take profit 1475, and you're only normally going to extend it to the 618 because that's normally where you reverse. So your last take profit will be somewhere around $1,600, and then you take everything off the table and wait to see what the next move is going to be because you don't know if it's going to break down from the 618, and you don't know if it's going to continue from the 618. If we even make it to the 618, which is why you're looking at each specific level as a chance to take profit. Right now, this is the thing. As you break each level, you do not want to come back below and break it to the downside. Meaning, if we get back above the 236 and we find support, getting back below it and losing that support is normally grounds for a failure. Meaning that, yeah, you were able to get above, but you weren't able to get the actual push you needed to continue it. So now you're going to fail and continue to go down. So, meaning if we get up to the 382, and we hit our target, and then it fails to hit the 50, which is 1475, and let's say it breaks below the 382 and starts to close below the 382. initially you're still good as long as you're above 236, but the minute you break the 236, now everything pretty much, and also if we're using the stop limit strategy, once you break the 236 and make it to the 382, that lower level stop limit that should have been below the ones or the zero spot, which is your local low, should be, well, I move mine to the 236. I move mine to the 236 once we make it to the 382. If we make it to the 50, I move it up to the 382. If we make it to the 618, I move it up to the 50, as well as being able to take some profit off the table. But you're gonna use each one of these levels as a target if price continues to break the level before it. So if we break 236, I'm looking at 382. If we break 382, I'm looking at 50. As long as I'm able to hold the one that I broke and closed above. And that's another thing. You want to understand closures versus breaks, because you can break above and still not close above, which is what I actually like that happened today with Link. Boogie, if you can't pull up Link real quick.
Sure.
Now this wasn't done with fib. This was done with moving averages. But I spoke about this within the last couple of days, how you normally run up to the 20-day exponential. We broke, but what didn't happen?
We
Anybody?
didn't go above it.
Didn't find support.
No. We broke above it, but what didn't? You're right. We didn't find support, but what didn't we? We did not
Close.
There you go. We did not close above it. We closed shy. We broke it, but we didn't even close above it, and this keeps
Came
happening.
back down.
Right. And now look at your next candlestick. What does it appear to be doing?
It,
Being rejected almost.
Exactly, by this magical invisible line. So that's what I was just explaining that about closures. That not breaking is not enough. Breaking itself is not enough. You need to close above those levels, because a break, somebody else that seen that break would be like, oh shit, we're breaking out. Let me take the move up to the next one. And you didn't even close. And now you're looking at retracement, and now you're looking at possible failure, even though we're battling it out right now with that level. We're battling it out right now with that level.
you're fighting that 20-day and the 382 line, right?
Yep, exact, because now they're coinciding together, which we weren't really going to get into. I might get into how certain TA will coincide with other TA, which will give you a stronger prediction out of it. Because now, using what Miss Agnes said, not only do you have the 20-day exponential moving average being utilized as resistance, you also have your 382 fib level being utilized as resistance.
Recorded.
What? Oh. Okay. All right. Now, Miss Artist said she wanted to
Switching
share
computers.
hers.
Sorry about that, Brother Mir. I was
No,
trying to
you
move
all good.
Windows. Okay.
You all good. Let me find Miss Artist real quick. Thank you for that, Brother Boogie.
Hey, no problem.
You can now share your screen, Miss Artist.
Okay, y'all. I'm gonna just share what I seen from my eyes. Okay,
Mm-hmm.
come on. So this is the Fibonacci line that I looked at and seen. Because here it went to the well, from the wick. I kind of was looking at the wicks. I ain't gonna lie, I'm a little confused, but I'm just
No, I
keep
got you.
looking.
So I'm gonna show you what you did real quick. All right.
Okay.
Do this for me real quick, Miss Artist. Let me see. Da-da-da-da-da-da-da-da. That's interesting. It lets me do it with some of y'all computers, but some of y'all computers it doesn't. Go over to the prices over on. In fact, go down to the bottom where it says trading panel. Right. See at the very bottom where it says trading panel.
Uh-huh.
Go down and put your cursor. Go up. Right. Go to the right a little bit. There we go. I just want you to get rid of that. All right. So.
Oh, okay.
Now, what I want you to do is go over on the left and turn your magnet on. Over on the far left, turn your magnet on. Down to the bottom. Go down towards the bottom.
This one.
Right. Go down one more. Right there. Turn
Yeah,
that
this
magnet
one.
on. Yep. Now go back up and hit that hit the cross. No, right above that. Right above that. Right, there you go. Click on that. Okay, cool. Now, what I want you to do, you see where your one spot is up there at, what is that, 3560? Go grab that one spot on your fib level all the way up there on the right.
This one?
That's the wrong fib. Erase that one. Get rid of that one. Click on
I
that
don't,
and get rid of that.
I don't know how to erase it.
Click on it one time and hit the delete button on your keyboard.
Oh, I ain't got no delete button on my keyboard.
Ah. Okay, go up and hit the trash can up there in the right hand corner. Go up and
Sorry.
hit the trash can. Nah, you all will.
This
Hit that
one?
little. Yep.
Okay.
Okay, and go erase that other one too. That other blue one. Get rid of that one.
All right.
And then now you see where your one spot is over there by 3560. See that little dotted line going up into the right corner by the blue line. Take that. Go over there and hit the where it starts at, and see if you can drag it. In fact, right click on your screen. Right click on your full screen for me real quick.
Okay, I right clicked it.
No, right click in the middle of the screen. Go in the middle of the screen and just right click where it's pitch black at. There we go. Go down and hit remove drawings at the very bottom. Do it again. Right click and then go down and hit remove drawings when you right click.
You see it, right?
Nope. Right click again. You had it open, but it closed up.
This computer running slow. That's probably why.
Nah, it's all good. I just seen it. It just opened up for us. Don't even worry. Go up to where it says Ethereum US dollar index. Over on the yep. Go right. Go down a little bit. Right there. Now go to the right. You see what no, go back up. Go to the right. See where those three dots are? Go hit those three dots. And now go down. Ah, this ain't the. Go down and hit. It's not settings though. How do you find this without right clicking? Let me see. Hold on. Let me check. Let me check, man. How do you find that without right clicking?
Reset chart right here.
Let me see. Hold on. Let me come back over and take a look. Hit reset chart. Let me see what happens. Hopefully it don't reset the whole damn thing. Nah, not really. Go over and click on your Fibonacci. You can hide the drawing. No, I'm not trying to hide it. I want her to actually. I was going to try to clear the whole screen. Man, you just did it. Try right clicking one more time. Just try right clicking right in the middle of the screen one more time.
I ain't got no mouse. I'm on my laptop.
Right. So, so what would it be on a lap? So you got the touch screen, the touch type of laptop. There it goes. Go down and hit remove drawings. I know how you do it. Put two fingers. Now, if you got a touchpad, put two
Right
fingers on the
here.
touchpad. Yep. Go down and hit remove drawings.
Okay. Ooh, Lord, I feel like I'm in slow class.
Now you all good. Now, what I want you to do is go down and to the bottom of the chart in the middle. Go in the middle. Yep. Hit the plus button. Blow the chart up a little bit. Hit that plus button. Blow it up a little bit.
I got.
Keep going. Keep going. Keep going. Keep going. Okay, right there. Now, what I also want you to do is go up to your candles. Go up to your candlesticks. Go all the way up to the very top. Right there. Open up your candles. Let me see. We're on candles. Go over and go back up to Ethereum versus US dollar 1D index.
Mm-hmm.
Go to hit the three. Go down a little bit and hit the three dots to the right again.
Okay.
Go down to settings. Go to You got everything over here right. I'm trying to figure out why the hell all your candlesticks are red.
That's what I was trying to figure out. I'm like, why is all my candlesticks red?
Because it's not in here. Why the hell are all your candlesticks red? I thought it was on Hakanashi. That wasn't it.
That's what I was going to say. She may not have it in that.
But it's on right though. Look, her borders are green. Her body is correct
Right.
on here. That's interesting. Go hit OK. Don't worry about it. We ain't gonna harp on it too much. We can still utilize this because it's just candlesticks at the end of the day. Now go over and get your Fibonacci tool. Go grab your Fibonacci tool. All the way, nope, over there to the left. Go up, right? Go down to the one below it. Right there. Click on that one time. Now, what I want you to do before you click on anything, go over into the middle of the chart. Look, you see where your red 20-day moving average is? That red line that's floating across the
Yes.
screen.
Yes.
Follow that red line for me real quick. There you go. Follow
Okay.
it. Now stop right. Keep going. Keep going. Keep going. Stop right there. Now go to the top of that red candlestick. Nope, to the left. Go back to the left.
This one.
Use the one to the right. I think that's got a higher wick. I'm gonna use the wick.
This
Use
one
the
right
one to the
here.
right.
This one.
Yep. And then click on it. Now go down and to the right. Go down and to the right and go down to that lowest wick right there. Connect it to exactly where the wick is. Connect it to exactly where the wick is with the magnet. Connect it to exactly where that lowest wick is. Keep going down. Keep going down.
This one.
Right. Nope, the one below it. Right there. Right there. Yep. Click.
Okay. Click it.
Now, what I want you to do is you see how that toolkit opened up top with the rainbow in it and the crayon?
Yes.
Go up and hit that cog wheel next to 1px. Hit the cog wheel next to 1px. Hit that little wheel. Now hit extend lines right. Scroll down in that. Turn on 1272 all the way down to 4 and turn on 1414 all the way down to 3414. You see those boxes? Yep.
Uh-huh.
So 1272 all the way down to 4. Turn all those on all the way down to 4.
Okay.
Yep, hit the last one. And then on the left-hand side, do 1414 down to 3414.
Okay.
Now go down some more.
Uh-oh.
Shit.
Nope, hit the little circle, Yep, and go down some more. Now where it says values, change that to percents. Change values to percents. Change left to right. And go down and hit OK. There you go.
Okay.
That's how you properly pull the fib, and that's how it should look.
Okay, so I can just save this setting, right?
It's already saved.
Okay.
Everything's
All right.
already automatically saved. And as we can see, when we keep the colors in there, she's in the red zone. She's in the red zone. She needs to move up to the yellowish green zone in order to see higher movements. If she continues to make those candlesticks below the red zone, 9 times out of 10, she's going to continue to go down. She needs to take out that red zone. That's what we're looking at here with her swing high, swing low on Ethereum. The red zone is what price?
Uh,
Go
863.
Nope. Look at the top. Look where the red number
Oh,
is. What's the red number?
118, 1118. This one,
No,
the 236.
Yep, there you go.
Okay.
And what price is that?
The 1130.
So now, what does that tell us? What is that telling us about price right now, as far as it relates to Fibonacci support and resistance?
I don't know.
What are we at right now? Would that be support or resistance that we're at right now?
Resistance.
Correct. So what that's telling us is on the daily, if price is unable to get above what on the daily?
Oh, 130.
Exactly. That's your husband?
Yeah.
Man, tell him to come to the mic and speak
He
up,
act
man.
like he
Tell
don't
him
want to
come and
talk.
do this
I'm
shit.
like, you can talk.
My bad.
What's going on, homie?
What's going on? How you doing?
Bad, all is well. So right now you at resistance, right? So we can say without a shadow of a doubt, price is not going to go any higher until a daily is able to break and find support above what price?
1130.
That easy. It's that easy, y'all. If price is unable to close above 1130, you're not going to go any higher. Not break, close. So we need to get a daily closure above 1130. If we're unable to break 1130, more than likely we're going to float down to what price? What's your lower price below the 1130?
1119.
Fib levels. We're only use the fib levels.
Oh, the 863.
Right, $863. So if we're unable to break 1130 to the upside on a daily closure, normally what happens is you break down to your lower support level, which is $863. To which, if we break that, I'm gonna show you how to look at the lower prices as well. Right now, we're just trying to get a normal understanding of how to use the fib level. So you're at your first level of reflection, which is your 236. Once we break the 236 and find support above it, what's gonna be your next 3 price targets? What prices are your next 3 price targets? Not the fib. You're gonna use the fib level, but what are the prices that you're gonna target to the upside?
1296,
Mm-hmm.
1430,
Mm-hmm.
and 1564.
Right. Understanding that you could do what at each one? Fail.
What do you mean?
I'm gonna put it out there. You could fail at each one, meaning each one could be a rejection level, and then you might not make it to the next one. That's why you give yourself 3 different targets.
Okay.
Oh, that's what you were saying when you were saying break it in 1,000 into 20%.
Right. Because you might not.
Okay.
I mean, if you're just like, oh, I'm gonna put my take profit at the highest order because I want the best profit. You might hit the 382, hit the 50, and then fail and keep going down. I've seen it happen a million times. So it's like, nah, let me get profit taken at each one of these levels. Inshallah, well, hopefully I can hit all 3 of them. But if not, at least I got some profit off the table. You get what I mean? And normally, if you hit each one and then break below the 236, the move is over. That's why if I'm using stop limits, stop market, stop losses, I would place it relative to the fib level that I just broke.
Okay.
And that's the importance of doing it on the daily with the
Yes,
fib.
ma'am.
Okay.
Yep. I mean, we're gonna do it on different time frames. What I'm trying to get y'all to do first is understand the larger trend, because I got people that come to me and they're using a 5-minute chart, a 15-minute chart, talking about we're bullish and we're bearish, and it's like, nah. What tells you if you're bullish or you're bearish are the larger time frames? You're just looking at little capitulation or a little bit of price action within that time frame, right? So on a larger time frame, we're bearish as hell. But if you break this down, go down to like a 15-minute real quick. Go up there and hit the 15M at the very top left-hand corner. Hit 15M. That shit looks bullish now, doesn't it?
Right.
I know what you're using. Hold on. Man, I know what you're using because I've had my candlesticks like this. What are you using? I've had my candlesticks like this before. I'm trying to remember what I did to make them like this because you want to reverse it. Man, what did you do?
1296. If it breaks resistance, or if it doesn't, it'll go to 863.
It'll go to 863. And that means you want to place it on a downtrend, make money on a downtrend.
Exactly. If you break 863, you want to bet on more downside.
That part.
Hey, I know why this is. I know why it's working like that. You know what you're using? You're using the EMA MA crossover. On the EMA MA crossover, anytime it's below a certain level. So yeah, go. I'm gonna show you which another one to use. X that one out. Now, what I want you to do is go up to your indicators. Go hit indicators at the very top. Nope. Yeah, right there. And type in EMA. That's 20, 50, 100, 200. That's the one you want.
Here we go. Okay.
All right, cool.
It's
Bam,
up
you
there
got that
now.
on there. Okay, cool. All right, y'all got that. Y'all got that.
236.
Now all that's gonna be normal. Now break yourself back out to a daily now. Who's next? Anybody else want to go and show what they got?
Thank you.
Yep, not a problem. Nah, we not over with. Anybody else want to show what they got?
So Amir, those smaller time frames like the 15 minutes, that's what people use if they trying to scalp in and out real quickly on a real short time frame.
So not even so much scalping. Even though I don't trade on 15 minutes and all that, you know what I use 15 minutes, 30 minute, 1 hour, 2 hour, 4 hour for? Because they spill in the higher time frame. So let's look at this real quick on a daily, right? If I'm looking at this and I'm utilizing RSI plus MACD, I still got negative momentum and I'm kind of below the RSI. You're breaking it a little bit, but you're below it. But as you go to lower time frames, so if we go to an hourly, right? Well, let me just work my way back. On a 4 hour, what are we doing? We're losing positive momentum, right? Meaning that the buyers are getting tired and we could sell off. So if I look at it daily and I see that I'm not out of negative momentum, this tells me what? This could happen where you're losing negative momentum, losing it, and then you just get another wave of negative momentum. That's what could happen here because on the 4 hour, we're losing. On the 4 hour, if we were gaining positive momentum, it would then coincide with us losing negative momentum on the daily, which then we would look for more upside. But because you're seeing the positive momentum lose on the 4-hour, which spills into the daily, you're looking for more downside. So now from the hour, I'm going to go back. I mean, from the 4, I'm going to go back to an hourly. On the hourly, we're in negative momentum, and you're below. If you're looking at the MACD or the MACD and the signal line, which one is a moving average, one is a MACD level. You just look when it crosses over, you're bearish. You're bearish there. So the hourly is bearish, right? The hourly is still bearish. So if we go back to a 15-minute, the 15-minute is doing what? Actually going from positive momentum into bearish momentum. Excuse me, positive momentum into negative momentum. So now what does this usually entail? You seeing more downside. So if I'm looking for downside on a 15-minute and then I go over to a 30-minute, I'm losing buying power on a 30-minute. Why? Because I'm going into the negative on a 15-minute, which is then going to drag the 30-minute with it, which is then going to drag the hourly with it, which is going to make the hourly continue to be negative, which is then going to make the 4-hour continue to be lose power, which is going to make it go into the negative, which is then going to make the daily continue to be negative. Did that make sense to y'all?
Yes, it does.
Yes. So on the lower time frame, Brother Mir, would that be an area where if you see that trend going into the negative momentum, would you look at that as for possible entry points?
Definitely. Depending on what time frame you're trying to trade it on. So like what we looked at, for those that just real quick, right? Something we looked at yesterday with Ethereum. Well, with a number of different coins, right? For those that understand, when you're looking for divergences, one thing that we've seen on a 4-hour, right, which is what I usually look for me to see a reversal on the lows, I look for bullish divergence. Bullish divergence, real quick, this ain't got nothing to do with Fibonacci. This
Bullish
is a good one.
divergence, and you make
Bullish divergence is where you have a low on the oscillator, but a higher low, right, relative to your previous low. But on price, you have a low. Well, that'd be right here. And then you have a lower low. Just let me get the definition real quick, just so that it's recorded and everybody understands why we're using this. So bullish divergence. A bullish divergence occurs when prices fall to a new low. Okay, well, prices went to 2 new lows actually, but look here, you actually went to 2 higher lows relative to that previous low here. But anyways, bullish divergence occurs when prices fall to a new low, while on an oscillator fails to reach a new low. This situation, just this situation, it's only on a 4-hour. It's not anywhere else. Only on a 4-hour. Well, you could probably go back and see if you got it on other time frames, which you did not have it on a day. No, you didn't have it on the hourly. It's only prepping it on a 4-hour. So that means that you're only using this for a 4-hour. Okay. This demonstrates that the bears are losing power and that the bulls are ready to control the market again. Often, a bullish divergence marks the end of a downtrend. Now, since it was only on a 4-hour, it's only relevant on a 4-hour. Okay, you don't say, "Oh, well, there's bullish divergence on the day." No, but it can spill over into the daily being bullish. But as of right now, that was only 4-hour bullish divergence, and it did give you, from bottom to top, a 32% return.
they hit a new low.
A 32% return. Now, why is this important? Because if you don't know bullish divergence, all you see is price going lower. That's all you're looking at. Oh, fuck, it's going, excuse my language. Oh, man, it's going lower. But then when you're able to identify, oh, well, hold on, the RSI didn't go lower. This is actually bullish. Then it gives you the ability to take positions there, right? Which doesn't mean you're going to trade every time you see bullish divergence to the upside. That's still most likely be like a scout move. If you're in a downtrend, you're looking to take advantage of that bullish divergence because you're looking to short the market, meaning you're looking for that bounce and looking to take advantage of that bounce, right? So someone taking the position on the 4-hour bullish divergence and then taking the position on this high, right, and looking to short here. And if we are looking on the daily for any type of bullish divergence, let's say that this is our local low on the daily. Remember, bullish divergence only occurs when you make lower lows on price but higher lows on the RSI. So now if we're looking at the daily to make any type of bullish divergence, we'd be looking for what, y'all?
The lower lows.
There you
Higher
go. A
low.
lower low. No, lower low. Lower low on price, but a higher low on RSI. Is that making sense? Look at your 4-hour here.
So a lower low on the MACD
No, on price. Price.
on the price act.
It's
Okay.
it's all about when you're looking at divergences, it's all about price versus your oscillators. These are your oscillators, right? Normally, you're going to see it more prevalent in the RSI than the MACD, though you can see it in both, and sometimes you may see it in the MACD, but you may not see it in RSI. Me personally, I like to see it in RSI more so than in MACD, but when I see it on both, right? So if we were to open up the MACD here, excuse me, and look at our low from July 13th, and then our next low, which is right here around June 18th. Well, no, I said July, my fault. June 13th to June 18th. And then we look at price and we say, okay, where's June 18th at? That'd be, 13th, excuse me. That'd be right here to right here. So now, this is actually a double whammy. You got bullish divergence on both the RSI and your MACD. That, when you see shit like that, that tells you you should. Let me say this too. Nothing is edged in stone here, y'all. All it is give you an edge in making decisions as far as you dealing with the price. That's all it does. So nothing is edged in stone, but it does give you more so of an edge of making that decision. You know what? I think this is going to go to the upside based off of this, this, and this. It's almost like a math problem. 1 + 1 = 2. 2 is the move going to the upside. You get what I'm saying? It's just it's adding up. Hold on, give me 1 second. There we go. All right, let me get rid of this real quick. Let's get back to the Fibonacci real quick. What was I about to go to? What was I going into? I think I threw myself off. What was I going into? Oh, we were talking about lower time frames, which is why I looked at that. Okay, now, so everybody got swing high to swing low. We're looking for it to go up. But since we're kind of failing here, right? You also want to look to see, okay, well, what's my downside potential? Now, you don't really have a local high yet on the daily. You don't really have it just yet, though you could be forming it now. So when you don't have it, but you want to kind of get ahead of the game, remember, you can go down to lower time frames. So from here on Ethereum, and we can actually go back to Bitcoin and use that one as well. And look at, now this is something else I want y'all to practice doing too. I want everyone to go into their fib because I want y'all to be able to look at these different time frames respectfully without being confused about the higher time frame. So I want everyone to go on their daily, whether it's Bitcoin or Ethereum, whichever one you're using. But I want you to click on the dot right here where your fib level is. Double click on it. And I want you to go to visibility. And I want you to turn visibility off at everything but the daily. And you can leave it on 1 through 5 or whatever you want. You can bring it all the way down just to 1 through whatever. But just leave your visibility on the daily if you're on the daily chart with your fib. Okay? I want everyone to do that right now. Let me know when y'all got it done.
Done.
Hold on. Where's my mic? Volume went out. Hold on. Where is the thing at? Let me switch this. So there we go. All right, cool. So is everybody done?
No. Now, what are we doing exactly? I'm here at visibility.
Okay, so what I want you to do, so double click on Fibonacci, go into visibility and turn all these check mark boxes off other than the days. Turn everything off other than the days.
And the range, keep ranges
Keep the
on?
ranges on?
Yeah, you keep the ranges on.
Okay. Done.
All right, I got it now.
I got it.
Now, once you got that, I want you to move down to a 4-hour. And this is how your now, let me say this too. In order for you to get full mobility of your chart, let me just refresh this because I don't think everybody can move the chart around like I am. So in order for you to get full mobility of your chart, right? I'm gonna get rid of these oscillators by double clicking. If you double click, it brings it in, brings it out. I'm gonna get rid of this watch list by clicking on it. Now, what I'm gonna do is I'm gonna drag this to the middle by clicking and holding and dragging it to the middle, but I can't go up and down. You see, I cannot go up and down. In order for me to go up and down, because sometimes I don't want this volume down here to be in my way, and I can easily, turn the volume off, but I don't want to do that. What I'm gonna do is go over here to the side where the prices are. I'm gonna slide it down slightly, and then and you can slide it up or down. It doesn't matter. Just if you're coming from a fresh screen, Remember, can't go up and down, only left and right. Pull it in the middle. Come over here, slightly up or down, doesn't matter. And then bam, I get 360 degrees mobility of the screen. Does everybody got that?
Yes.
Yes.
Once again,
Yeah.
if the screen is brand
Yes,
new,
I got
you
it.
can only go left and right,
Yes.
can't go up and down. Come over here to the side, slight tweak, and now you're
So
360
in and
degrees.
out.
Yep. So now bring it right here in the middle. We're looking at a 4-hour. I'm going to open this up a tad bit, drag it back over. And that's why you need the full mobility of it, so you can adjust it the way you need it. So now
And
we're
hold.
looking at a 4-hour, okay? We're trying to see how low this thing could go if it does pull back. So now we're looking at not a swing high. Remember, if you're trying to look how high something's going to go, you're always going to start high. That's the easiest way to understand how to pull this. So if I'm looking at how high it could go, I'd still do the same thing. Swing high, swing low. We're at a 618 on a 4-hour. Okay, blah, blah, blah. That's your full retracement in all actuality. That's another interesting thing, which we're not going to look at now because I want to get the low side. But damn, how can I leave this? I can't really leave this alone. So, okay, on the 4-hour, right? Unlike the daily. Let me see. Let me actually go to the 4-hour. That's another thing. When you're on a 4-hour, do the same thing. Open it up. No, I didn't get the side to side. Hold on, I got you. Turn this off the daily and just leave it on the hour. You can put it from hour to 4-hour, or you can just put it all just 4-hour. Sometimes I leave this on the hourly because it does still coincide. So we'll take a look. But I want you to look at the daily. Look at your rejection level, 236. That's from your swing high, from your daily high, right? And then the 4-hour, different swing high here, different swing high, because you had a bounce here and then a swing low. Now, one could close it up and be like, oh, well, no, your high is really up here, and use one of these, which then gives you the same two. Actually, this is pretty good too, right? So it's relative to the individual. I like this swing high because it gives us that full 618 retracement. And now me understanding that full 618 retracement, which is this is normally the level of rejection. If I do adjust it like this, it makes this 236 that much more relevant. Because not only is this your first level of reflection on a larger macro swing high, swing low, if we minimize it, this is your 618, which normally gives you your full retracement. So on a smaller level, you had your full retracement. On a larger level, you're at your first reflection point, which is normally a level of rejection anyway. So they both add up. So you can normally say, well, we're at a level where we're more than likely going to reject unless we're able to break through our 236 or our 618. But that's not what we're looking at here. We're trying to see what the lower levels are going to be. So in that case, we blow this up. Oh, Miss Artist. So once again, regular chart, you can only go left and right, can't go up and down. Go over here, right to the prices, click and hold, and point it up, down. Just move it up or down while you're clicking and holding it so I can squeeze it down, squeeze it up. Doesn't matter. Just leave it relative to how it is. And then now you get 360 degrees mobility of it. Now, from here, I'm going to get my fib and I'm going to pull it. I'm going to first start with my wick and see what this gives me. Swing high. Excuse me, swing low, swing high because we're looking for downside. All right. Damn. Hold on. Hold on. There we go. So that's the body. That's the wick. Let me see what the body closing. Let me see if I actually like wick to body here even cleaner. And it's really about what it's really about the individual, y'all. What makes it cleaner to you? I like how we got these body closes coming into this 236, which now says we got our first reflection point. We got our low, we got our high. We've had our first pullback. It came to what? The 236. That means you don't want to break back below $20,050. If you do break below $20,050, what are your price targets to the downside? Somebody give them to me. Looking at my screen, what are your price targets to the downside?
19,580.
What else? Somebody else? Somebody else give me another one.
The 50%, 19,294.
Somebody else give me another one.
618, 18,821.
Somebody give me the last of the Mohicans. What's the last reflection point you got on a normal retracement level? Textbook normal retracement level.
1759.
Nope.
18,281.
There you go. 786, which happens to be your support level here. So if you break this move is all pretty much over. And now that's where you start using your lower levels where the way I use this, me, Anytime I break a one spot, I normally target the 1618 to the downside. It's just the way that I've seen it happen over and over again. So if we break 18,281, looking at this chart, my overall level that I'm looking to the downside before we see a significant bounce is going to be $15,607. So you still look at 16,719, 16,263. This is your ultimate level, but you can see a bounce at either one of these for it to try to get back into the swing of things. Okay. So now remember, we're looking for lower levels. Now, if we're looking for continuation of this uptrend, where should we turn around at?
But it has to break the 20,000, the zero spot has to go above that and close, break and close, go.
What's the lowest you want to go to before you what's the lowest level you want to break to before you see a reverse, or before you determine if you're going to reverse or continue in the original direction?
The lowest, 236.
20,000?
Yeah,
Nope.
216.
No.
Nope.
If it,
What? Ain't that? Come on now.
wait, what is
6180.
786?
Somebody just said it.
76.
6180.
618, y'all. Remember, my normal level of retracement is always
Oh,
618.
yours.
Oh, you, okay. I
So
got you.
remember, if we're looking
15,
for an ultimate pullback, you're going to pull
Yeah.
back to the 618 and then reverse from there and continue in the original direction. With
Right.
me, normally if we break the 618, it's over with. Even though they said you could turn around at the 786, which
Right.
yeah, I give it less credence, because with my thing, breaking the 618, you're going to break below your previous low here. So I would count that as a reversal, me personally. So my level is the lowest level I'm looking to go, and this pullback is 18,821. Anything lower than that is all bets off the table for me. If I was trading this to the upside, which I'm not doing right now, I'm actually shorting a lot of this stuff. But in the description and in the definition and in what we're doing right now, these would be your reversal levels. These would also, if you're shorting, these would be your take profit levels. If you short it from this point, you would look to take profit and take exposure off of the table because you can reverse at this level, right? Or move your stop limits. And if you're not using stop limits, if you're discharging, then you use each one of these prices as you break below it as a level to get out of that discharge if you break back above it. Meaning if you're discharging from this point and we get down to 18,820, if we broke back up and started flirting with 19,200, I'd close my discharge. Does that make sense?
Yes.
Yes.
Yeah.
Okay, cool. Let me get rid of that.
Brother Mir, a question for you.
Yep.
I noticed that your swing low to swing high, you use the wick on the low, swing low, and then use the body close for the swing high. I know you usually like to do body to body or wick to wick. So I guess it just depends on where the candles fall, right?
Yeah, it's really, because remember, this shit's just art. Ain't no right, wrong way, in my opinion, to do it. So as I was setting it, I seen how the 236 coincided here perfectly. So I'm like, no, I want to use that as my mark then. I'm still a swing low, swing high. I just chose to use the wick low and the body close. Still prevalent though. Still stands. You get what I mean?
Yep. Gotcha. Thank you.
Yep. No problem. No problem. No problem. So now what I want everyone to do, let's go to let's keep it easy. Let's use some of the OGs. Let's go to Litecoin, LTC, USD, and you want to look for, I don't think they have an index for Litecoin. They don't. So for Litecoin, use LTC, US dollar, Bitstamp, which should be the second option. Bitstamp. Damn, Litecoin actually seeing some good price action here. Damn good. Phenomenally good. Well, not phenomenally good, but let me see. Ethereum. Better than ETH. Look at that. Look at the difference between ETH and Litecoin. So what let me show you a couple of things that didn't happen with ETH that did happen with Litecoin. Come back and look at my chart real quick, y'all. Let me know when you're looking.
All right.
I'm here. Right here.
All right. So as we go down, we get our bump, we get a low, we get another bump, we get our low, and then we get our lower high. So you got a double top here, followed by a lower high. Now, as we look at Litecoin, you come from down here, get your bump here, You get your double top here, right? Same double top, same dates if you go look at the dates, but then you come down and get a bump and exceed your previous high here. So now Litecoin is way more bullish than Ethereum. Way more bullish than Ethereum. Do y'all understand why?
Yes.
No.
Because you
Because
broke
it
your previous high
broke the
Oh,
high.
this previous high.
right here. It's all about breaking those previous highs or previous lows, y'all. You did not do that
Okay.
here with Ethereum. This is your previous high. Failure.
I
Litecoin,
get
though, on
what
the
you're
other
saying.
hand,
Way more bullish. It reached a good new downtrend.
look at that. Let's just go and look at the different charts real quick. XRP, nope. Link, nope. So, yes, broke your previous high with a back test. Near, nope. Ape, yes. Aave, nope. Algo, nope. Luna, nope, absolutely not. Band, nope. Well, so just going through those couple of charts, you can tell the difference between what assets are bullish or more bullish than other assets, correct?
That's on a horrible downtrend. Yes.
All right, so now, if we're going to come over here and use Fibonacci, it's one of two ways we can do it. Let's start with the daily first. So now we're looking at what? Where's our previous high at on the daily? You can use this or this. It's up to you. We're going to try both of them and see which one correlates better. So I'm going to start with my wick to wick here and here. Okay. Let's see, wick to wick there. Much better, much better, much better. Rejection support. Okay, so we're going to use our previous high here, previous low here. Let's do body to body as well, though. Actually, body to body looks nice too. Body to body looks pretty nice, but I'm gonna use wick to wick just for this example. So the first thing I want to do is find what are my upside potential. Well, we've already broken our 236 and broken inside what? What are we inside right now?
The golden ratio.
Yep. So you're at your first target, to which if you hold here, you can take those higher upside targets now. Let's just say you missed this move. You're like, okay, well, I missed it. Well, you can buy the retest of the support here, which I guarantee people bought this retest of this support right here. And then use probably your wick low here as a stop limit in order to see 55.37 and possibly 58.92 to the upside before you start to reverse. If you reverse, which you can always move higher. But basically what you're seeing here, unlike the other charts on the daily, remember, what's going on with Bitcoin on the daily? Hey, what happened to it? Hold on. There we go.
It didn't close above the 236.
Absolutely not. Ethereum, what happened on the daily? Well, let me get it here.
It's rejecting.
Rejected
Either
where?
on the 236.
Same.
Exactly.
Or there's
Chainlink. Let's see what happened with Chainlink on the daily. Hold on, let me switch this around. So Chainlink looking more like Litecoin right now, whereas you did break your 236 and you're above your 382. So let's get back to Litecoin.
golden ratio.
So now that tells us what about Litecoin? That as long as you're doing what, you should do what?
Closing above the 382, you're looking for targets in the 55.37 range.
Yep. And then if you're able to take that out and find closures above that, what's your next target?
The 618, move to the next level,
Which is what price?
the 58.92.
Now, what happens if you fail to 382? What could you possibly look at as downside potentials?
I'll give somebody else a chance.
$47.
$47
43.
Say it again.
to 236.
Correct. That easy. If we end up closing a daily below 51.82, right now you're at 52.84, so about $1.02 below. If we end up closing below that, I'll then look for continuation down. If we, well, there's another thing. If we close below it, we want to see that next daily close below it as well. So this one could break below it, but we didn't open below it. That next one we want to open and a close below, which could then ensure, the $47 price range to the downside. But more so than not, we've already had two supports above here. If we were to close bearish and then get another opening below it, I would then, change my direction to the downside and look for a retest of the 236, to which then you could bounce here, because as you're looking at market fluctuation, right, we're looking at low, high, higher low, higher high. You can come all the way down here and still make a higher low than your previous low here. Remember, as much as it's about the fibs, it's still about regular market fluctuation as well, which as long as you're making higher highs and higher lows, you're good. So as long as you make a low higher than 44.52, which our 236 is 47.43, you're actually still good for an uptrend, which this would actually be a good, if you're looking for a bounce and you did break here. Let me see what those are. Yeah, daily actually looks good here on Litecoin for continuation per the MACD and the RSI.
And the
Actually,
golden ratio, I'm sorry, the golden ratio is in between the 618 and the 382.
yep. So it's these three price ranges that make up the golden ratio.
Okay.
These are always going to be your price targets to the upside and or the downside. Upside and or the downside. So now let's look at downside targets with Litecoin, right? Which we're going to break down to a 4 hour just to get a ground on it. Whoop, hold on. Let me go to the daily, which this should already be on visibility. Nope. Bam, bam. 4 hour. Refresh. Here we go. So now we want to pull this from our swing low, which, let's do it like this first. Okay, so 51.40 down to 46.70. Now let's see what that gives us on here. Nah, not good enough. Not good enough. We'll use body to body here. So what I'm gonna do is I'm gonna get rid of my wicks real quick, like so, and just use body to body. Body to body gives us that strong 236 support right here that we're looking at now, which comes in at 52.03. So now swing low, swing high. If we lose the 236, which is 52.03, what are you looking at as possible pullback levels?
38.20. Price
But what?
51.13. 50.13.
Yep. What else?
48.
Then 48.59.
Yep. And then what else?
Then
What's the last inflection point?
47.05.
Now, for someone that's been doing this for a while, can y'all tell me what's interesting about the 47.05 level and the 618? And actually your 382. Actually, each one have interesting qualities to them based off previous price action. Can anyone tell me what it is?
47.05. 608.
Let's say we weren't using Fibonacci and we were just using previous price action. Where would your pullback levels be if you're just using regular TA, for those that know?
Looking at where the previous support / resistance was.
So if we're above all resistance levels and we're up here, where should our previous support levels come in at? Your previous what?
About
Previous,
just under 57, maybe,
No,
right under that.
we're not using the fib though. We're not using the fib. So just based off price, where would your previous support levels come in at? Your previous what?
About 49,
54.
Nah, I don't even want y'all to give me a price. I want y'all to generalize it if you're trying to explain it to somebody.
The next high. I mean,
My
the
man,
last previous
I
high.
think Miss Agnes was gonna say, she said the previous, then she stopped herself. She may have second guessed herself. Your previous highs. So now you're looking at this high and this high. And what's interesting about that is if we do throw the fibs back on, this is your 382, this is your 618, more so than not. That's what I was looking at, how they coincide with these two levels. So that's your golden ratio, 382 to the 618 is your possible pullbacks, which coincide with your previous highs. That's all I wanted y'all to get an idea of, how sometimes things coincide or correlate with each other. So, but as of right now, pretty damn, actually, looking at this on the 4 hour, you got a couple of things working for you here. You actually got a double bottom here, which this isn't nothing about Fibonacci, but let me not get into that. So you got strong support at the 236. That's what I'm going to say. You have strong support at the 236. If these rectangles can take out this high on this rectangle, that could give you enough momentum to move to the high of this rectangle. Now, if we're looking at this bouncing and reaching this rectangle and going higher, we need to do what? We need to see what our higher prices are going to be. And we do that by what? Looking at the daily. And that high that we looked at is what? Roughly around the 50. So now if we break the 50, right, 4 hour, we're looking at our highest high being 55.10. But if we break that previous high on the 4 hour and it boils over into the daily, what's your next price target based off the daily fib? Hold on, let me do this real quick because I didn't do it the first time. There we go. Bam. Off the daily fib, what's your next level?
63.97.
Not that.
Oh.
Nope.
Oh, wait,
Not
so
yet.
you based on it now? Oh, the 50 at the 55.37.
Nope, not the 55, because the 55 on the 4 hour coincides with where your one spot is roughly, right? So your
Right.
one spot's 55.10. So if you break 55.10 on the 4 hour, on the
The
daily,
382?
618.
there y'all go, 618,
Move to the next one.
$58.92.
Right. Okay.
I think our computer moving slow.
Yeah, it may be lagging. So break your 4 hour high, move to your next high on the daily. Break your 4 hour high, move to your next high on the daily.
4 hour high.
And what was the 4 hour high? The two.
The 4 hour high is 55.10. Because remember, we did a swing low, swing high, trying to see how low we're gonna go. But if you stop going low and you break your previous high, then it boils out into the higher time frame. So now you say, okay, well, if we're breaking our previous high here, and our wick high is there, which you still, I mean, if you break out 55.10, my thing is you're more than likely going to take the 50% out. So I target the 618, even though it's off by what, 27 cents. So yeah, you got to take out 27 cents more, and then you target the 618, which is 58.92, which I would round up and just say $59, because you're probably going to wick and hit $59 and then retrace. Any questions?
I'm gonna have to rewatch that part. Bully, you be talking fast.
My apologies. So basically, right, lower time frames lead into higher time frames. So if we got to swing low, swing high on a 4 hour, and what happens is that this right here tends to break. Let's say this happens. Whoop. Hold on. Bam. I want this to go a little bit smaller. There we go, something like that. Just about right there. Bam. So let's say we break our previous high and back test it, meaning we get support above this high. I then go to a daily. There we go. And look for this to,
next stop.
yep, go to the next high, which would be, hold on. Things hard to use sometimes. There, something like that. My fault, kind of shoddy, but y'all get the idea. Does that make sense for most as of right now? Does that make sense?
Yeah.
Yes.
Okay, let me get rid of this. Okay. Now I'm gonna be honest with y'all. You can use these on all different time frames. So let's just real quick. Let's go to like a 15-minute on. Let's put our wicks back on. Let's go to Bitcoin. Open. Refresh. Shrink, because you want to see what trend you're in on a 15-minute. Okay, we're in an uptrend on a 15-minute, right? So now what I want to do on a 15-minute is pull this from my swing low to my swing high, right? Whoop. Swing low, swing high like so. We see we got to bounce off the 236, but we see we're rejecting. Whoop, hold on, not right. There we go. There we go. There we go. That's even better. All right. So we're in limbo right now. We're below the 236, but we're above the 236, but below our previous high, and we're starting to make. Oh wow! In fact, look, we are starting to make, not part of this class, but look at this though.
Head and shoulders.
Yep, exactly.
Yeah.
That's almost spot on point. If this comes back down here to listen, y'all, if this breaks from here and slopes its way back down here to this 382, that's going to be a head and shoulders, to then which I would target prices.
70.
Back down to around 18,000. What is it? 18,450. If this played out, that's just what I see right now. This is a 15-minute, but this can boil over into larger time frames once again. But anyways, let me get rid of that. Bam, bam, bam. All right, so now lower time frame Fibonacci, 15-minute. You're above your 236. You don't want to break your 236. If you do lose the 236, I really should be letting y'all do all this stuff. Well, anyways, if you do break the 236, then you're looking at your lower time frames as possible targets. If you break your previous high, right, you can still keep it on the 15-minute. What you want to do is find your previous high before that dip, which would be here, which then you can now do something similar to this, right? Bam. Now, look at its coincides. On a macro level, your previous high coincides with your 618, which that means you've had what already in a 15-minute? What did you already have?
A full retracement.
My man's already.
Mm-hmm.
Look at this. Hold on. Let me get rid of this so y'all can understand. Hold on. It just gave you a full retracement. Spot on. I mean, and that's what I'm saying. As we're pulling these fibs, y'all see how this shit's working over and over and over and over and over again?
Yeah, indeed.
So you see how much less work you have to do if you're just able to identify where your highs and your lows are? Fibonacci is going to give you all the price points. Biggest thing I think people need help with is where to pull from. And that's identifying your previous highs, previous lows relative to the price chart that you're using. Right? So now that we, on a macro level, have a full 618 retracement, we would look for a pullback now, which on a micro level, we're now looking at these levels, which if we do get down to the 618, let's mark that off real quick. Hold on. Let's say we do get to the 618. Let's leave that there. Get rid of this. Let's see how that coincides with the macro. If it does.
So the micro, you're referring to a short time frame with days.
In this case, so normally when I'm talking about micro, macro, I'm talking about a 4-hour versus a daily versus the hourly. In this case, I'm talking about the size of the move. So this would be a macro. This would be the larger. No, this would be a micro. This would be a larger macro, right? So this would be a move inside this move because you still got this move going on, but inside this larger move, you have a smaller move also going on. Which, if we look at, what was that I marked off? Was that the 618? I think it. Yeah, it was. What's your 618 on the macro?
It's on the 236 line. It lines up.
So now this is perfect. On the micro, right? On the micro, with that being your 618, hold on. Bam, right there. With this being your 618 and your 236, on a 618, if you break this, this is what normally?
Reversal.
My man's. So on a macro level, right? If we did the whole thing of making it higher all the way up here and we come from the 618 and break all the way back down below the 236, what is that?
Continuation to like the downside.
Right, it's the same thing, a reversal. So you're looking at it as a reversal on the micro, but it's also a reversal on the macro. But they both coincide and show you the exact same price point. So just to make things real easy, what is the major level we need to hold on Bitcoin unless we're going to see lower prices around $17,000 and $16,000? What's the major level we're looking at right now?
Okay.
We just looked at it on two different times, on two different fib levels. They're both coinciding with each other.
The 231, I mean the 236.
There you go, 236/816, $18,860. That's your main pivot point right now with Bitcoin as we correlate the two fib levels. Did y'all see how I came up with that though? Like, and why I came up with that and why it works or why it makes sense? Does that make sense?
Yep.
Y'all don't be saying y'all don't. Man, let me. I want to make sure y'all know this shit. I want to make sure y'all understand how to use this.
You said
we understand it. I mean, you're showing in the two different time frames. They're both showing the same. They're both hitting the same. just at a different Fibonacci level.
Right, but each one of those Fibonacci levels mean the same thing, right?
It's
Breaking the
the
236 on the macro level normally grounds for a reversal. Breaking the
right,
618 on a micro level normally grounds for a reversal. Where's it at?
a breakdown to the down.
Yeah, normally grounds for a breakdown. So that gives you that much more weight for you to say if you break below this level, you're either out of Bitcoin because you don't want to hold it because now you're looking to lose now and see let's see what our downside targets are going to be if we do take out that level, right? So below 18.6, you're looking at 18,330 and then 17.5. Below 17.5, now you're looking at coming down to that $15,000 level we talked about, 15,460 here. Before you get that 16,650, 16,170, and then $15,460. So breaking this level right here, you start looking at these lower levels, which if you break this level, these are your 3 price targets to the downside. That makes sense.
Yes, sir.
Do y'all see how we use 2 fib levels in one setting to tell you both directions? Does this make sense?
Yes.
So if we're able to break
I'm
this
processing
618
it.
here, go ahead, my fault.
No. I know. I'm just saying. I'm processing.
Yeah, and that's another thing, y'all. Even though I'm saying to y'all get it, I'm not expecting all y'all to get this like right now, right here, because I didn't get this when I was learning it myself. You know, it took me a while. So I just want, what I'm really saying is, do y'all understand the way I'm explaining it to understand it more? Is I guess what I'm asking. Does the explanations make
Yeah.
sense?
Yeah. I
Yes.
get the explanations.
Okay. So on a macro level, if we can take out our one spot on the high, but our 618 on the macro, what would be our targets to the upside?
21,812. First one.
76.
Yep. What's next?
The one spot.
Then
The
the
100.
786. What's that? 22,000.
22,960.
Speak
Yep.
up, Miss Agnes. You got it. I hear you saying it. Speak up.
Oh, no. I'm trying to give them a chance. I'm talking. I need to listen. I'm trying to give them a chance, Brother Mir.
I
'cause
got you.
He said it is 22,960.
Now, if we break 22,960, what do I normally look at as my next target to the upside? This is my personal preference.
The 618.
161.0.
1618, correct, which is $26,277. So that means if we're able to, and this right here, I can round up. If I break $23,000, I can more so than not ensure a move to at least $26,000, which gives you about a 13.45% move to the upside.
You said what was the price?
23,000. It's 22,960. You know, I was taught anything above this number round up, so I'll just say 23,000. If we can crack 23,000, I would extend targets somewhere north around 26,300. It's 277, but I round up 26 because you'll normally wick to the psychological level and then close below the mathematical level. Psychological 26,300 even numbers, mathematical level 26,277.
Mhm.
Make sense?
Yep.
Yep.
All
We get
right.
on replays, right?
Yeah. All y'all.
Questions.
Let me make sure this is recorded. Yep. Ooh, I'd be so salty if this wasn't recorded.
That was
Man, I done did that before. I done did whole classes and not record. Did the whole recording, just not record it. Like, damn, I gotta do it all over.
Salty as mud.
Let's see. Where we at right now on the daily in Bitcoin? Still struggling. I'm telling y'all, the more time you spend below this, because right now you're right there. All you need to do is take it out. The more time you spend below here, the weaker you get, and it gives you more chances to break down than it does to break up. You know what I'm saying? This is called, if I'm not mistaken, a doji or a pinball candlestick. It's just an indecisive candlestick. Basically, price did not know what the hell it wanted to do over the last 24 hours. This is like a BS candlestick almost, right? To whereas the next one, it could go either way. And right now, you've got selling volume coming in, red negative daily candlestick, 4 hour, you're already seeing retracements, need to take out your previous high. MACD continuously losing positive momentum. Not lost yet, but losing. I think taking out your 20-day here on the RSI on a 4-day would be the next telltale sign. Which you kind of got our head and shoulders up here too. Left shoulder, actually you do. Left shoulder, head, right shoulder. If this continues to come down and takes out here and take out here, I'm probably going to see more downside with Bitcoin. if I'm not mistaken.
How
Hmm.
many tops do you usually see for the breakdown as kind of like confirmation, or it doesn't really matter?
Wait, ask the question again.
Like put the fib lines back up on that 236 where it's hitting rejection off the 236 right there.
Ah, okay, on the daily.
How many taps do you say how it's weakening? Especially when you have the dojo or whatever.
You know
that-
what? It's not so much the taps. It's more so not so many how much, but what do the taps look like? Are they
Right.
strong taps? Are they green taps? Or are they red taps and weak taps or scammy like wick taps, along with added negative momentum, added downside on the oscillator? You know what I mean? It's like,
Yeah.
because we could be tapping this, and this right here could be starting to come in the book. Let me see a good one. Let me see a good one. Hold on. Let's say we did. Nah, that's not good enough. Hold on. I want to find an example of what you're looking for exactly. Hmm. Let's do. Ah, here we go. Perfect.
Oh, okay. Yeah, you got multiple taps there.
Whoop. All right, so we're only focusing on these constant taps right here, right? So you started off bearish, but then the taps got more bullish. You broke above your moving average here, and the same thing, you were losing positive momentum here, right? So we're doing the same thing, but the taps haven't started being bullish yet. Right now, we only got what, 2 taps, I believe, if I'm not mistaken, below the 236, which this actually took a minute to play out, right? So let me see, you broke down, got your rejection here. And it actually took, what is this? So day 1, 2, 3, 4, 5, about 6, 7 days, about a week in order to break it. But within that week, you did break back down from 10,400 back down to around $10,000 even, and then worked your way back up, which you could have failed here at any time, right? But as you can see, as you were going forward, you were constantly losing, and then you got the crossover here, crossover into positive momentum, crossover here, this candlestick, the next one, boom, you get the move, and it's up to that from there. So in present time, right now, this doesn't look the same. This looks more bearish than it did back then, and we're not that close into losing as much negative momentum. Yeah, MACD not even nowhere near crossing over the center line as well. So we got a lot more work to do here than I would say back there. Which, interestingly enough, look at this. Look, from all the way back there, look what our reflection point is, the 4236. From all the way back there, that's what's rejecting you. That's interesting as hell. And then look where your support is, pretty much a 3618. Wicked off the 3 spot. Interesting, but let's get rid of that. Bam. So it's about how strong can those taps be, more so than anything. And right now, you're not getting the strongest taps of what, because it's almost like, I don't want to use that example. Never mind. Here we go. Anybody ever seen Look Who's Talking?
With the
Go back.
baby,
Huh?
with those baby.
With the talking babies, yeah. Remember in the very beginning of the video what happened, how the baby came to be and how they were trying to break through and they couldn't break through, but one of them broke through?
No, but go ahead.
I'm trying to talk in code because it's similar. It's almost similar to sperm trying to break into the egg, y'all.
Oh,
They're
okay.
trying
Yeah.
to break.
No, I'm trying to think back to the movie. I don't remember the movie, but I just remember babies talking.
Because that's the best example. Like in my mind, is I see these things they're trying to break through this line and they're unable to break, and eventually they just lose.
Use the sperm one. That makes more sense to me. Trying to break.
That's what I see. You get what I'm saying? But that's basically it. So yeah, as you see it trying to break into the egg, if it can break through, it can move on higher. If it fails, it loses interest and then it fades away.
Okay.
So right now, you're looking to see, can you break into that egg? You tried it once, you failed. You tried it once, twice, and you know, the more you try it and the more you fail to get close to it, you just start fading away. And that's where you see lower prices. So we need to break this in order to get higher. Everything we just said through this whole class. We're gonna open it up for questions now. Anything anybody needs to work on, anything I didn't go over. Remember, this is just about Fibonacci. Even though I went into other little things, I just want y'all to understand how to use Fibonacci, and that's all as of right now. But it's gonna boil over into other things.
So Amir, when you choosing your swing high to swing lows or swing low to swing highs, looking on a daily, how do you, or what are some of the parameters you may use to choose? Are you going to look back a week or two, 7 days or 14 days back, or
No, it's not about. It's about where are those relative highs at. So if I'm looking at this on a line graph and we see that these are our lows, well, you got a high here, but I look for my last previous actual macro high, which would be here. So you would either use this one and or this one. It's relative to what you want to see with price. So if I'm using the line chart and I use this high, right, to this low, it gives me the 236 right here, 21,077. If I choose to use this one, it gives me a little bit more tighter range at 20,000, but I still call it $21,000. So either one is telling me that $21,000 is my reflection point. But I wouldn't go all the way, I mean, you can do stuff like this with me. Look at that. That doesn't even make any sense. Well, hold on. How the hell did this move over here? Hold on. Bam. There we go. So yeah, this one doesn't really give me anything to work with. There's nothing relative to this price right here, in here, anywhere. Now this is relative. Yeah, this is relative. But with me, I like to look at my last relative high to my last relative low, right? So your last relative high before this low here would be this one, which is kind of insignificant. I would look at more so my last major high before the major dump, and that would be this high before this dump. And I'm also looking at where, because sometimes, let me see, what was I gonna say? To identify the high, you got to look at where your previous dump was. So this was your high, this was your low. This was your high, this was your low. This was your high, so that means you can use this high or this high. I wouldn't come back and use this high because you have highs higher than that. So that one doesn't make sense. So your highest high, so in between this consolidation period, right? Your highest high is going to be this one. But if you're looking at your last relative high, it's going to be this one. So this is really going to come with the individual trader about which one makes more sense to them. I'm not going to tell y'all it's the wrong and or right way. It's going to be relative to what you start coming up with and what you start seeing transpire as you use it in those two different ways. Because you're going to back test. You're going to make wrong decisions. You're going to make right decisions. The right decisions are going to tell you how to correct the wrong decisions you made. If that makes sense.
No, it does.
Now, if you're looking to pull back for weeks, I would just pull it on a weekly chart, and then look what happens. Now on a weekly, our previous high is all the way back in April. Bam. If I'm not going to pull it on a daily and go back a couple of weeks, I'm just going to pull it on a weekly and look where my last weekly high was, which you can use. You can kind of use that high too. Let's see what it gives us. In fact, I actually like that high, 21,000. But that's the same high though on the daily and everything. It's just a higher high. But I would use this one because this is your last reflective high on a weekly. So on a weekly, you're not bullish till you get back above $50,000. You're kind of bullish when you get back above 33, really bullish above 50. Above 50, I look to take out my previous high and I look to hit $97,780 or $97,800 if we're able to close back above our weekly high. I would target this, and if we broke this, I would target here easily. But we got to work our ways up to the daily before we get here on the weekly. But you see why I wouldn't use that on the weekly basis, the daily, because I just use a weekly.
Thank you.
Not a problem. We're doing open questions for anybody that has questions. Anybody that wants to share their screen and try to maybe work on something. You know what I'm saying? We do have we'll open up for like 10 minutes of questions, just to make sure everybody got what was shared tonight. Was this helpful for anybody? Let me ask that first and foremost. Was this helpful?
Yes.
Definitely helpful.
That's very helpful.
Yeah, it was very helpful for me. I've been practicing with it, and this is
Kind of
going.
breaking up, brother Boogie. Say it again.
I said I've been practicing with the fibs, and this is really going to help me just further understand how to use them and place them.
Mm-hmm. Mm-hmm.
Yes, this was helpful for us as well.
Anybody completely new?
I'm kind of new to this right here. I was a little in and out, but um, I'm definitely understanding though. I'm a little behind though, but I get it.
Nah, you all. That's why I'm gonna send out a recording to everybody, so everybody be able to review this over and over and over
Yeah.
again.
Mm-hmm.
But just the method is what I wanted y'all to be able to grasp of why it's beneficial for you to use it, and like I say, it alleviates you of having to go find those support and resistance levels because it does it for you.
I'm trying to find out how to get my Fibonacci like yours. I'm a
Hold
little
on,
behind.
let me see. I can help you right now. Hold on. Let me see. Hold on. Where is? Here we go. Who was that? Who was that needs help?
Bradley.
Okay, hold on. Bradley right here. Bam, bam. Now, if you're on a MacBook, it's a bunch of process you got to go through to share your screen. But if not, you should be able to share easily.
I got you.
Yep, we on there.
Uh,
Got you. Double click on the top point. No, on the Fibonacci. On the Fibonacci. Go down to your Fibonacci. Go right there where that
right.
black dot is right there. Click on that.
Uh-huh. Double right
Now
click it.
go all the way up to that little box that just opened up and hit that circle next to 1px. All the way up to the top. Hit that little circle next to 1px. Hit that little circle next to it right there. All right, hit extend lines to the right. Hit that box, extend lines right. Now go down a little bit. Go down just a little bit. Keep going down a little bit more, a little bit more, a little bit more. Bring it down a little bit more. There you go. Stop right there. Now turn on the boxes from 1, 2, 7, 2 down to 4. Turn on all those boxes in between. 1, 2, 7. No. Go over to the right. Go down a little bit. Start with the clear box right there. Turn all those boxes on down from that one down to number 4. So start
You said
clicking
one,
on
two, seven.
boxes.
Oh, right here. All right, right
Yeah.
here.
Yep.
Call all of them more.
Now, no, stop right there. Stop right there. Now go to the
Okay.
left and do 1, 4, 1, 4 down to 3, 4, 1, 4.
Okay.
All right, now go down some more. Scroll down a little bit more for me. See where it says values and a little arrow. Hit that arrow on the values. Change it to percents. Now change that from left to right. Go down. No, you got it right. Go down. Go back. Hit left. Change it from left to right. Change it from left to right. It's on left still.
It's on left. All right, well, I got you.
Now go up to where it says background and slide that piece back and forth, and you can adjust the color how you want to.
Okay.
And then just hit OK down at the bottom, and it's gonna save it like that for you. And it's always gonna work like that now.
And if I want to change it, just go back on settings. Just go
Yep.
back like where I just came from. Okay.
Yep.
Definitely appreciate that. I appreciate the hands-on.
No, it's all well. That's the best way for people to learn that. Like, even with the Brother Rich classes, I like the whole YouTube thing, but I don't like that I can't do hands-on with people. So that's why I like doing these classes the way that I do them, because y'all can really get the help and assistance that y'all need versus just having to go off a video. Which
So if I purchase a NFT for the 1 hour consultation, like would it be hands-on like this?
all my classes are hands-on. Every class I do for myself. If somebody hosting it, I can't say how they're gonna do it. But for all my consultations, all my NFTs, everything's gonna be hands-on like this every single time. That's how I've always done it. Every class is gonna be recorded, and you're always gonna get a copy of it.
Yes, sir. I definitely appreciate that, man.
Brother Mir,
No
will
doubt.
I'll work
you
my
get
way.
the recording in the NFT, inside the NFT for this class?
Once I mint the NFTs, y'all gonna get the recordings before I mint the NFTs though. So y'all gonna get the recordings of this, so just so y'all can review it. Either tonight or tomorrow morning. Nah, in fact, you know what? I just thought about it. You know what? I am gonna have to just airdrop all y'all. Don't worry about it. I'm gonna make the NFTs tonight, and I'm gonna airdrop them to y'all. Cause I forgot everybody signed up through the NFTs, not through the through the
IG.
email. So I'm gonna
Thank
everybody that
you.
purchased the NFT through OpenSea, I'm going to airdrop you a new NFT with the actual recording of this video, to which you can download and resell it if you want to.
Okay. Then one question for me, since you're still on this screen, can you talk about the visibility again? What that does when you went into?
Oh, okay. So visibility, right? Visibility. Let me pull my screen up real quick. So that's I changed the visibility on these relative to the time frame I'm using. Because let's just say that you don't, right? Let's say we leave visibility on all this stuff, right? And hold on, let me get rid of that. And then we come and we use the weekly, and we come and use the 5-day, and we come and use the 3-day and the daily. And let's say that I want to put, let's say I go down to a 15-minute, right? And I want to use, here we go, fib from here to here like we did before. But let's say that I don't have, okay, visibility is not off. So now when I go back out into the daily, hold on, bam. Now I got all these different fib levels, and it just makes it too complicated for me to look at what I want to look at. So I make it visible per the time frame that I'm using. With a 4-hour, you can normally leave the visibility all the way out from an hour up into a 4-hour, because they pretty much coincide pretty closely. Lower than that, 30 minutes to like a minute is more relative.
Yeah, and then they start overlapping, and you're trying to figure out which time zone.
Right, you're trying to figure out which one is the one you're looking at. So
Right.
I just choose the, now if I do need to use two on the same screen, then I'm just doing like I did before, and I'm doing a macro micro. So like here, I want to see what my downside potential is. So I'm gonna do a swing low, swing high, but I also want to know what my upside potential is. So I'm gonna do a swing high, swing low. So this tells me that I'm reflecting from my 236, which is also my one spot on the swing low, swing high. So man, I'm just start explaining this shit all over again. Y'all get it. This is my first reflection point. It's also my high, so I'm breaking down. These are my possible lows. These are my possible highs on the macro. If I can break my 236, cool. I target these 3 levels. If I break my 236 here, cool. I target these 3 levels.
Okay. Thank you for that explanation.
Mm-hmm.
Because what I was doing was I moved one to the left side and one to the right side.
And I used to do similar to that. So like with this one, what I would have did is kept those ones on the left.
Right.
Hold on. And I take these ones, just the numbers, right?
Right.
Hold on. Coordinates, style. And I move these ones back over to the left. That way I got my upside over here and my downside over here. That's another method. I didn't show y'all that, but that's another thing you can do if you're doing two fibs on one screen, just so it's not all bunched up. You can see where your reflection points are on each side. I hope y'all caught this. Click on it, go back into your settings, and whichever one's your larger one normally, I put to the right, and then the smaller one I put to the left. Okay?
Thank you.
I was going to ask you about that again too, the micro and the macro, to go over that. So I'm glad you did. Thank you.
Yep, not a problem. Not a problem. Not a problem. Any other
And
closing
when you use
questions?
that macro, you pretty much looking at a 4-hour and a daily, or a, you aren't necessarily looking at a daily and a 15.
Nah,
Like
not at all. Not at all. Because a 15-minute doesn't have any correlation with a daily to me.
Gotcha.
15-minute got more correlation with a 30-minute and an hour than it does a 4-hour or a daily.
So you use closer time frame for the micro and macro.
Yep. So if you want to do a micro macro on a lower time frame, that'd be you looking at a 15-minute relative to an hourly, like I do the 4-hour relative to the daily. Not to be confused with how we just did this macro. He's talking time frames. With this macro, if I was on a 30-minute, it'd be something like this. My 30-minute would look like this. Oop. Previous swing low, swing high, which this one we would move back over to the other side. Right, and then I do my previous swing high here, swing low, 618, nice. And I move these over to the other side, which is my left. Bam. You can see where your top is here. That is your, well, you can see a 618 here. So that's how you do a macro, micro on the same time frame, not to be confused with two different time frames.
Gotcha.
I like that. Yep.
So that's an essential. This is essential right here.
This is what?
Essential, like the both the two sides that you just did.
What you mean central?
Essential.
Like, yeah, essential.
Oh, essential? I mean, shit, it can be. It can be. All this shit's essential. I mean, the more ammunition you got, the more shots you're gonna hit.
Okay.
Right. He's just showing you, I guess, if it hits the top, then you know where to move if it's going up, and if it hits the bottom, then you know it's going the opposite way.
Yeah, because I mean, we can call this a top, but this is also a 618, so this is also a full retracement. That's why I want y'all to understand the whole retracement thing, because this is a full retracement on the macro. So normally you are going to reverse from this point. So if we are going to reverse, we need to know our lower side. So that's why we got our lower sides over here to tell us how low we're going to reverse. And the 618 coincides with the 236. So breaking below here, more than likely you're coming down here.
618.
Any closing questions or comments, y'all?
So I want to do a daily trade. I'm going to look at the 4 hours.
If ask him.
You said it. You just said it. You just said it. Just said it.
What's the question?
If you want to do a daily trade, you look at the daily, the 4 hour.
Yeah, the 4 hours.
Daily in the 4 hour. Daily in the 4 hour. You can easily now you can use daily 4 hour down to an hourly, because an hourly is going to spill over into a 4 hour, which a 4 hour is going to spill over into a daily. So the hourly is set you up for a 4 hour trade, while a 4 hour trade is going to set you up for a daily. So the hourly setting you up for the 4 hours initially setting you up for the daily. If that makes sense.
But if you're
You can really just use
scalping,
4 hour though. It ain't gotta be that. You can really just use the 4 hour. It ain't gotta be that complicated though. You can just use 4 hour.
if you're doing scalp moves, so it's the 15 to the hour is what you're using.
I mean, shit. Ready, man. If you want to do hyper trades, 1 minute to an hourly, really, you can trade on a 1 minute, 5 minute chart and just make real quick entries and exits.
You got to be quick.
Let's say you wanted to go to a 5 minute chart, right? How would you have played this 5 minute chart right here? Let's see. See, high is 21,000, low is 19,008. So yeah, you break the 236, you target your 618, you actually exceed that, raise your stop limit. You probably would have got tapped out here, but you would have left with all your profit because you exceeded it and it went towards the 786. So this right here would have gave you a quick what? Because you would have used your previous low here as your stop limit. Quick 3% move to the upside in 3 hours. Not too bad.
Not counting if you're doing leverage trading.
Yeah, definitely. Yeah. Leverage trading, 10x leverage is a 30% gains.
And what is that? 3 hours you said?
Yeah, 3 hours and 20 minutes.
Ooh, okay.
This is a 5 minute chart, and I did the exact same thing that I always do. It doesn't, with me, it doesn't matter the time frames and none of that. It's all just candlesticks and movements. Now, let me say this: the lower the time frame, the less credible this shit becomes. Like the less credible it be. 1 minute, 3 minute, 5 minute, wild stuff can happen. The larger the time frames, the more solid what's the word? What's the word I'm looking for? The more solid it is, basically. Lower time frames, you can get kind of bonkers and wacky. So just be mindful of that too.
Thank you.
Yep. I'm gonna take 2 more questions or comments. Anybody not get to ask any questions or anything that's been silent and just hasn't spoken up? Anybody not get to ask anything? It needs to
Me,
ask?
me, I mean, I don't need to ask anything. Both of my questions were answered.
Okay.
How,
Okay.
yeah, how you get your fib the way you, how to get my fib the way it looks like yours, and I think Ms. Pack also asked my question.
And that's why I like when people ask questions, because these are going to be questions that people probably got watching the video later on, which is why I like to have it interactive. So thank you for those. Thank you for those questions.
I asked a lot of questions. So.
No, that's good. I want y'all to. I don't want y'all to be silent. I want y'all to get shit. Understand what we doing. You get what I'm saying?
After the end of a head and shoulders, are we looking for a reversal or like a continuation? I know they ain't really got nothing
Wait,
to
say it
fit.
again.
At the end of a head and shoulders pattern, are we looking for like a reversal or a continuation?
Nah, I just go do a reevaluation of the chart and see what it's looking like. Now, depending on out of a head and shoulders, it depends on what you broke to the downside. If you broke, like, let's just say the head and shoulders is on a fib level, but it brought you back below the 786, I'd look for a reversal. Then I wouldn't even look for continue. Well, it'd be a continuation of the downside, which would be a reversal in the fib levels, but it definitely be a continuation from the downside that the head and shoulders took you. Now, if it's an inverse head and shoulders, then of course we'd be looking for more upside.
Okay.
Yep. 10:44. With that being said, I'm gonna go ahead and close this out. I appreciate y'all. Definitely got some good time and definitely got some good explanations and some good examples. I hope that it was of value to all of you that was here tonight. I hope y'all able to utilize this strategy in making decisions as far as what you should do with price, where price is gonna go. Right now, some of the lesser known alts are rallying, such as Link here, but the other coins such as Bitcoin and Ethereum are not really moving that much. Which means Link could be going for a fake out while the rest of the market, if the rest of the market does dump, or Link could lead the rest of the assets into more upside potential. That's another thing that could happen, right? The altcoins could sometimes give you an indication of what the larger coins are going to end up doing if you see that volume coming into those altcoins. And at the same time, those altcoins could see those pumps and then get reflected from the larger coins coming down. So I would say between Link and Bitcoin, let Bitcoin be my guide, though Link can get some upside potential. If Bitcoin fails, Link more so than likely is going to fail. With that being said, I'm going to go ahead and end this, y'all. To the next one, I appreciate y'all. Peace, power, and prosperity. Everybody have a good night.
Thank you.
Thank you. Thank you.
Yep, thank all y'all for showing up.
Peace.